Test, test, test. All right, so I think we are up, guys, and I am live. I'm gonna go ahead and just adjust everything. Adjust everything here and get it all good and all going. Apologize for the little bit of a delay, but I'm getting there, guys. I am getting there where I will be, streaming my regular stream. So look, I wanted to start at 3 o'clock. It's 3:30. Okay, so 30 minutes behind, but it's no big deal. I'm gonna go ahead and get into my positions, and then we'll see what looks good. Let me refresh this just to make sure I have a test. There we go. Great. All right, so there's my chat. Much better, much better. All right. So look, 30 minutes in, guys. So I'm just gonna jump straight into it and go into my positions. Now, a lot of my positions got stopped yesterday, and I took profits on a lot of those. The market was, it was really due for some type of a pop, some type of a small rally, and I was kind of telling you guys that be careful because it was very overextended. And so let me lower my mic here. It seems like it's a little bit loud. The market was very overextended, and so that pop was expected. Okay, that pop was expected, and it took profits on. I took profits on quite a few of my positions. So that being said, what I'm going to do now is, again, we got 20 minutes. I'm going to just start scanning, seeing what looks good. Again, seeing how my positions are doing so far, and just kind of jump into that. And let me also do that there. Okay. So okay, so I'm gonna just kind of get into it. Let's see here. Starbucks. I'm gonna go ahead and I got stopped out on my shares, so I'm going to take my profits on. I'm gonna take my profits on the. Might put here. Let me close that position. Okay. All right. So closed out Starbucks. What else do I have in here? Colgate. I'm in Colgate. Now, guys, I told you yesterday that what happens is a lot of people try to go and hide. They run into these defensive stocks like Colgate, Procter and Gamble, things like that. So I'm going in there now and shorting them. Okay, so while these people are trying to hide in there, the money that's trying to hide in there, I'm going to kind of try to catch them and short some of those. So that's what's going on with CL. Got to see. I got to put. For those of you who've been following me, I don't really trade options. Pretty much just shares, just trading the actual shares. But starting to put a little bit of options because I know there's quite a few of you who do trade options, and so those of you who are following, who want to see what options I may have, you can see there. Okay, so I do have a put on CL plus my shares. What's up with IVZ, Invesco? I'm gonna go ahead and I got a put on this one. I'm gonna just go ahead and get out of this one. I don't like how this one's trading. All right, so closing that. Bank of America, got to put, plus I got some shares on Bank of America and Comcast. All right, so I got see something here.
Coming out with new metrics for when people need to wear masks indoors, essentially basing this off a different way of looking at the virus, noting that at this point in the pandemic, after so many people have been vaccinated, though they say still right. Not enough, and so many people have
I think I'll put it right there. Just want to make sure my volume is good.
So under these new
Okay,
metrics,
so let me see here.
the recommendations for when people need to mask
Comcast.
include if you have symptoms, if you have a positive test,
Still
or
looking
COVID
good.
exposure, that applies
Very, very
across
close
how
to
much
the,
COVID is in the community. But then they say
I may
only
just,
those in high COVID-19
no,
community
I'll wait till this
level
one hits the
areas,
stop. It's super
are
close to the
recommended to wear
stop.
masks in public
So I
indoor
won't,
settings, including in
you know,
schools.
lose
And as
any
part of
money on
they're
this trade.
updating their
So
school
we'll
mask
see.
guidance as well, to only recommend
Colgate
mask
put
wearing
looks
in
good.
schools in those areas
And
of
that's
high
pretty much it. All right, so the only
COVID-19
three options I
levels.
have right now
this
is the
COVID-19
Bank of
community
America
level
put,
metric is a different
my
way of looking
Colgate
at things
put,
as well,
and my
whereas before it was
Comcast
based
put.
only on case
So,
numbers and transmission,
Other than that, I
happening
did
within the
short
community.
Apple
Now
today.
it's a combination of case
All
levels,
right,
hospital
and
admissions, and hospital capacity. Under this new way of
let's
looking
see
at COVID,
what's good with
about
Apple.
72% of the population is in an area of low or medium COVID-19 community levels. Those are the yellow and green
All
here
right, so
on this map. In those medium areas, they recommend only people at high risk of severe disease talk with their doctors.
this is nothing more than a short covering rally, guys. So even though a lot of stuff got, you know, the trend is still down. Until we get out of that, don't get too excited and start. Definitely, I don't recommend you guys start buying. So all the people are buying right now. I am selling to them and shorting into this little pop of a rally that we have. This is still bearish fundamentals all around the board. And of course, I don't trade off fundamentals, but you know, you have to be aware. So you have to. I'm always kind of trying to stay aware of the geopolitical issues, everything that's going on, everything that's on the news. A lot of people are like, oh, I don't care for CNBC. Listen, I don't care for CNBC either, but I do have it on because I need to know what they are telling the retails, the general public. Okay, because I'm trading against them. Okay, I'm trading with the institutions, and I'm trading against a lot of what the people are watching. So I need to know what's going on. I need to know what they're trying to pump and whatnot. So this rally that CNBC was really crazy on, and the market had a strong comeback, I want to short into that. Well, people are buying into it, which is crazy. But you know, if you're not looking at charts and you're just watching these guys, that's going to happen. So anyways, Apple is one of my shorts. See here. And if it gets, you know, this, I'm just putting real tight stops, but nonetheless still going short. So Apple looks good. How many positions do I have right now?
Well, what Jen Psaki just said at the White House is they're going to be releasing.
All right, so I got 9 stocks. Let me go ahead and go into the Dow. What's up, Chico Bow Wow? How you doing, man? Happy Friday. Sheeny, what's up? Good to see you guys. I made it a little bit late, but I'm here. And I'm trying to trade for all it's worth for the next 15 minutes. Let's see what's good. You guys can actually just kind of see what I'm looking at, and then probably after the market close, maybe I'll do some stock reviews. But okay, Amgen, I don't trade Amgen. Nothing here. Okay, so I already kind of ran through the Dow 30. Let me see what's good with the S&P 500 and see what's kind of moving there.
Fascinating stuff. I mean, that was exactly
okay,
so what are the assets? Where are they? And maybe
ACN. ACN doesn't look too bad. Like this little pop here.
Yesterday, when we come back, a top analyst weighs in on if there's more room to run for that name. The Market Zone is coming up next.
Okay, got a nice, yeah, ACN looks pretty good. All right, so let me, let's see, what am I risking on this? Maybe 1%. And what is our typical range with ACN? Yeah, this looks pretty good, but the thing is that I am in ACN. Just didn't see it right there. So obviously reconfirming something I'm already in. AEP. Okay, I was looking at AEP, American Electric Power. This one looks like it's I don't know, maybe reversing here. We may have a reversal, but too much, too fast, too soon. I don't really like to get into stocks where they're just moving super fast, super quickly because you can get in the reverse on you, and you're already down. So it's trading too high in comparison what it normally trades. So let me see here. Let me continue going on. AIG, AMD. This was one that I shorted earlier this week. By the way, guys, the week was very good. The trades worked out pretty good. I was in the green for the week, so that's always a good thing. What's the movement looking like? Looks like the healthcare is kind of moving. A lot of healthcare is moving. Citigroup. What do we got here? Nah. Caterpillar. This thing is probably too much of a risk right here. Yeah, that's like 5%. Don't want to risk that. Too much for me right now. Too much on Caterpillar. Let's see what we have with all right, so Colgate. I'm already in Colgate. Let's take off the flag on that. Comcast. I'm already in that. Capital One. Capital One, pretty much. All right, so this one I was looking at, this is like, all right, so Capital One, yeah, I'll go ahead and short. I'll get a position started on Capital One. Let's see. Okay, Capital One. I'll go back to this one later and set all of my stops and whatnot.
Welcome back to this rally day on Wall Street. We've got a great lineup coming your way in the second hour of Closing Bell. Market expert Ed Yardeni will weigh in on the surge for stocks and the one part of the market he says could be heading for, quote, boom times. We'll ask
Actually, I'll just set my stop now. You never know what could happen in the market. So let's just
Fred Kemp from the Atlantic Council will weigh in on the
set
latest
that
in
now.
Ukraine and Putin's next move. And we'll look ahead to key
Okay,
retail earnings next
Capital
week on the
One.
back of some big
See what else we
swings for
got.
consumer stocks today. But first, with 10 minutes left in the trading day, you know what time it is. We're in the closing.
Yeah, you got
bell
you
market
got a
zone.
real
Today,
pop
we've got
all
Ripple's
across the
Wealth
market,
Management CEO
but everything's
Josh
still in the
Brown
downtrend.
with us. Josh, it's your birthday too, so happy birthday.
How about that? Pretty exciting, right?
Yeah.
Okay, here we go. Chevron CVX. This is a.
Since November 2020. What do you think of this?
This is looking pretty good.
I mean, it's nice. It's definitely helping some people, myself included, with some tough areas of the market.
I think oil's
but,
going to be
really,
getting a little
it
bit of
looks
a
like large
boost
cap tech is kind
with
of
all the
underperforming.
geopolitical issues going on.
So
That's
you've got
going to
follow through in some of the high
help
growth
CVX.
stuff.
Let me
That's
see
good.
here.
But the things that have been leading all year just look that much better on
All right,
a day
I'll put
like
this on the
today.
flag. I'll get back to this one later.
Sherwin,
Go back
Lind,
into it.
XLB, Berkshire,
Disney.
financials look good. The
Disney
whole
looks like
numbers
it's
look great.
maybe back
Healthcare is outperforming,
trying to
which
climb
is
back out of that
defensive.
rut that it
And
was in.
then
It was in a
huge
real
moves
serious
in
downtrend.
consumer, defensive. You're not going to see a day bigger than this for that group. P&G up 4.5, Coke up 4, Target up 4.
We'll go
So
with Dow.
I don't know that you would look at this and
Yeah,
say,
I don't like
okay,
Dow.
risk back on, all our problems are solved. But where it does help is if
DVN,
you're in a portfolio where
Emerson.
you've got pain and you were looking for an opportunity to maybe say you own too much of something, like this is your chance to unload some of that.
FCX.
And I suspect a lot of shrewd investors are doing that.
I want to zone in on one stock in particular
too
here.
much.
Cybersecurity stock Zscaler plummeting.
I don't like
today
risking more than
despite
5%
posting
on
beat
trades,
earnings and
guys.
revenue for the second quarter. The company did
That's
issue
that's a lot for me.
earnings guidance. Overall, it's been a strong week for cybersecurity stocks, though, as you might imagine, with Russia-Ukraine conflict.
I mean, I do it
is
sometimes,
prompting
but
many experts to warn
I
of
need to
potential
stop doing that.
future cybersecurity attacks. Josh, what do you make
The
of
smaller the
movements
risk,
in
the better.
Zscaler, and then just more broadly, the cybersecurity
General
stocks here? I mean,
Dynamics.
can you still buy into them after
A lot
the
of
big moves
excitement
that
on
we've
General
seen.
Dynamics.
So I haven't done a deep dive on Zscaler. I looked at the release. It looks very company specific to me. The name I own in this space is CrowdStrike. I'm a long-term investor in CrowdStrike. I've been in it for quite some time. The stock
IBM
has had a
already
good week
short.
this week. It's definitely
JP
come
Morgan
down with a
Chase.
lot
I
of
was
high
thinking
growth
about
names,
JP Morgan.
but I'm going to stick with it because I think
So
they are
what am I gonna
positioned
do
really
here?
well in the space.
About a
Broadly
3%
speaking,
risk.
though, Zscaler is just one out of a million of these types of stories where they were all getting the benefit of the doubt that growth would be smooth and linear and there was nothing to worry
Yeah.
about. And one
I'll,
by one, we're learning as an investor.
I mean, the
class
banks are
that
weak,
things
but
aren't gonna be that, things aren't gonna
they
work
could be
out
turning
that
soon, so
simply.
I'll leave
if
that one
you
alone.
Like the Zscaler story, I don't necessarily think that today's action means that you shouldn't anymore. But you got a
Coke.
reminder: stocks don't do anything in a straight
I
line.
got
Go
stopped
up
out
or
on
down.
Coke, and look, it bounced
Yeah,
right
well, it's
back.
going pretty far down
They
here
do
today,
that.
down 15%, almost 16% for Zscaler. We do want to move on to another individual stock, though. Shares of Block, formerly known as Square, surging today on track for its best day ever after posting a strong quarterly beat, citing growing
Here we go,
success
some more
in its
energy.
Cash App business. So
Thing about
joining
this
us
one is
now
this is
Moshe
in a
Katri, who is
downtrend.
Wedbush Securities equity analyst, research analyst, and covers this name.
I don't want
I
to go
guess just
against
first
that.
of all, what do you
It's too
make
hard.
of this move? Pretty substantial here on the back of this result.
Hey Josh, happy birthday by the way. So a couple things. I would say it's a combination of better than feared results. Remember, they beat numbers, these are lowered expectations. And then on top of that, they spoke about improving outlook for the company's Cash App business. And this is all happening in the context of very mixed data
Nvidia.
points that actually have been
Nvidia.
impacting the space in general. Obviously, this space's performance has been dismal since November of last year.
There's not a lot of stuff
Moshe,
that's
again, you have a
I
neutral
mean, there's
rating
you know
on
you're
the
getting
stock.
a
Any
rally,
that
a
would
little
change
pop
that?
in a lot of everything, pretty much.
We've
But
had a neutral rating on the stock,
nothing
considering
looks
a couple
really good
things.
to
One,
kind of get in
the
at these
multiple,
levels.
this is
I mean,
pre-November.
not from what I see.
We're not big fans of the Afterpay
UPS
transaction.
stopped out of that one.
I think the streets love fest with BNPL, buy not pay later, has been kind of changed a bit. From our perspective, this looks more
Verizon.
a,
Just looking at
subprime
Verizon.
lending business.
This one's looking pretty
I think
good.
You can call it something else if you want. Some people call it BNPL. And I just don't understand the logic
Not
for
crazy about
paying,
the
originally they almost pay about $30 billion for this.
again.
Given
Movement is a
the
little too
corrections
fast,
in,
too soon.
Block's stock price, they ended up paying about 10.
Let's continue on.
change. So I think that's problematic. And then the other thing
AbbVie,
that,
don't
we
trade
worry about
healthcare.
is the fact that the year's guidance is pretty much back and loaded, especially in terms of Cash App's performance and profitability.
Went up in here. Okay.
Moshe, are there other names in this space that you like a little bit
All
more?
right, so let me
even
look
if they're
into
sort of going
on the
against
Nasdaq
consumer
100.
facing general
Let's see what we got
idea
going on
that
over
you
there.
have more conviction with than
It's
just
gonna be a
a
lot of
consumer
movement in the
rating on a
Nasdaq
name
100.
Like Block here, even though it's up 26%.
Yeah, we actually became a bit more constructive in the past few weeks on the networks, Visa and MasterCard.
Maybe
The way we see it,
Dr.
inflation
Pepper
is
looks
actually
pretty
going to
good.
be a positive for average ticket prices. So this will benefit the networks.
Yeah.
And on top of
Yeah, this
that,
one looks pretty
we
good.
also
Let me go
like
ahead
some
and
of the less expensive names in the group. These are companies that have two platforms catering to financial
all right, so
institutions.
got a little
and
bit of Dr.
merchants. So we're
Pepper
talking
on the
about
books.
Global Payments,
Let's continue
FIS,
on.
Fiserv, these are companies
Few
that
more
are
minutes.
trading roughly in mid-teens. PE
See if there's
multiples
anything
based on
else.
next year's numbers. They're growing top line about 8%. EPS growth is about 15 to 20. Very reasonable,
There's it.
and I would say
American Electric.
defensive, especially in this market.
Josh, what do you think of Block here, and I guess the group in general?
Lost my connection. What's that?
So
All
actually,
right.
I'd like to ask a question of my own. One of the things PayPal disclosed recently about their growth strategy was that
Marriott
it really
pretty much hit the
doesn't work.
stop.
They, I think, were paying $10 as a referral fee to all of their users.
Few more
in
minutes
exchange
left.
For getting friends to sign up for new accounts. And I think
I'm really not going to trade on
they
days
had
like this,
million,
guys, because
fraudulent
this is,
or
you know, it's harder to
false
trade,
revenue.
but I am
So how do these
seeing what's kind of
companies
moving,
continue to
because you
grow
could
at the
find
rates
some
that they
things
were
here.
from a user
Again,
base
healthcare.
standpoint? And is any of that really
So
going to be
there's some-
profitable growth from this point forward? Because they already have very large user bases,
Yeah,
Block
that-
and PayPal
What's
included.
this?
That's
Craft,
a good question.
alright.
So, unfortunately, you're kind of combining Block
Nah.
and PayPal the
Too
same
much.
bucket, and they're kind of different.
Too much
The way
risk.
we see it, PayPal is probably more of an e-commerce play, and you are.
I'll get
seeing
back to the
e-commerce
chat in a
trends
second, guys.
worldwide
Just want to wrap up these
post-pandemic.
last few
That's number
minutes.
one. Block is more of a brick and mortar play the way we see it, and I think ultimately it's going to be more about what sort of an ecosystem you have.
Yeah, everything is pretty much trading at the
It's gonna
highs.
It's going to make it really stickier.
We got a
for
little
consumers
bounce.
to stay within that ecosystem in terms of products and services. PayPal, I think, did the right thing in terms of focusing more on the consumers that actually are the what they call the high value accounts. This is where ARPU is going to go higher, and that's probably the right strategy. Square's kind of
Got a few
interesting.
more
They're talking
stocks
about,
left.
I believe in the past they spoke about 80 million users that touched the Cash App product, but they actually have about 45
Plunger
million
team did their
active
job,
users.
guys.
And so I would say both companies are focusing better and putting their energies better in terms of targeting the right consumers. These are the people that are actually going to go back and use that ecosystem more
Yeah,
and
nothing
more
looks like
to be able to
like it's
kind
in
of
great levels
raise
to
the
buy.
fee per user down the road.
A lot of stuff doesn't look
Moshe
good.
Katri, thanks for joining us. We got just over a minute left until the closing bell. Josh,
CERN.
real quick, it looks like we're moving towards session highs here, going into another weekend. What's your
CERN
take
looks
on
good
that?
for a
I'm actually very surprised.
And that's it.
I wasn't surprised.
That
by
is
the
it.
bounce yesterday, because I think things had gotten too negative too quickly. But I'm surprised by the follow through today.
So CERN maybe on Monday.
I'm not in the camp that the correction is
I don't
over.
know, actually. Nah.
But a day like today
Almost
could
there.
make
We'll see.
anybody second guess that stance.
All right, guys.
This
So
follow-through
if you
going
see
into the
my
weekend
what's on the
is
books,
surprising given all the horrible things that could potentially go wrong while nobody is able to touch
compared to when we started at on Monday, a lot of stuff. You know, I got stopped out on a lot of stuff yesterday,
Yeah, okay. And,
and today a couple of other things.
as I mentioned, coming back towards session highs, the Dow's up 828 points right now, about 2.5%.
I'll fill you in on the details, guys.
So far, the S&P up
So
2.25%, 4384. The Nasdaq finishing poised to finish
Lynn,
1.6%.
you guys know you guys know I was short on Lynn. Got stopped out of this one. Took a profit on it, of course. That's why you guys, when you have now that the market is over, you can take it easy and kind of chill and just kind of hang out with you guys. Let me open up the the queue. So if you guys want to look up any stocks or you want to share anything, whatever, I can start taking some requests. And I will be doing a video this week, guys. Market breakdown, kind of like what I do here, but I'm gonna do start doing some more video posts and updates on YouTube.
What happened here today and here this week? What do you think? Have we put the bottom end behind us?
Where
now that we know with
is-
certainty what has
where in the
happened
world
with
is my,
Russia and Ukraine? The invasion has happened, so at least that card has been played.
Yeah, it's really early days.
Oh, there we
agree
go.
with What I saw Josh just got done saying, which was that
How the heck they
it's
do
too
this?
much going into the weekend uncertainty. The next 2
Oh,
days
this
can
damn
be very
thing.
pivotal in what happens in the market. But I would just
I
say
hate
that
it
the
when it
last
does this,
72
guys.
hours, or maybe the last
It logs me out. It's like
last 3 trading days, let's call it, have taught us anything.
Very
is that
annoying.
Trying to perfectly time the markets are a fool's errand, right? If you logged into your brokerage account and decided to suddenly make changes because the market was
So
down
I am
crazy at the open
trying to
yesterday,
open up my
you
Warp
missed out
World,
on the
guys.
swing back, and you definitely didn't jump back in at the open this morning, which means that you also missed about a 2.5% increase, coming into this close. And so, if anything, the last
How
couple
the
of
heck
days
do
should
I
have proved
get
to
back
people
to
that,
Warp World,
trying
man?
to perfectly time the markets just it doesn't happen.
Log me out and then
Yeah,
takes me to
Josh,
this
I mean, the fact that
freaking
every
thing.
S&P sector finished markedly higher in the green. I mean, we saw treasury yields tick back up today. We saw gold come off. We saw crude come back off. So not like a full risk-on trade,
Oh,
but
come
still
on, give me a freaking break.
quite a rally in general.
I don't want
Where
to
do
go
you
to the
see
forum. I
opportunities
want to
here
go
as we
open
go
up
into another week and
Warp.
starting next
Oh
Tuesday, another month?
gosh.
Well, I want to
This
I
is-
just tell a very, very quick story from the legendary Art Cashin.
Okay,
Talks about
finally, I'm
early in his
back.
career in like 1960, in the run-up to the Cuban Missile Crisis. One day, a rumor hits the floor that the
Let's
missiles
do
will
this,
be there,
guys.
like they're
Open.
coming. for the continental U.S.
We're good.
He's running around. We
Matt,
sell
what's up, man?
orders. He's trying
Just
to
want to
get
thank you
sales
for
done.
what you're doing. Love it.
And his boss
Oh, you got to
calls him
sleep.
and
All
says,
right, man. Well, hey, it's always a pleasure having you in the room, Matt. Like I said, if you already left the room or if you're still here,
he says, no, no, no,
I'm going to be doing some YouTube videos. So wherever you're at in the world, you know, you'll be able to. Oh, okay, you're in
Game over.
Slovakia. So we'll see what happens.
You're gonna get this
You're a Puerto
massive
Rican.
relief
Well,
rally.
be
You
safe,
gotta
man.
prolong
Be
the
safe out
missiles
there.
in the air.
I will put the video post. So, you know, on YouTube should be seen. You know, I want to do one this week, guys. I really do. I got to get myself in the groove, you know, and doing these things consistently. Okay, that's been something that I'm trying to get with the channel. So last Friday I wasn't here. Apologies, guys. But you know, I wanted to do these videos on YouTube and kind of just do a quick market breakdown. I don't know, maybe I'll turn it to like a podcast, because sometimes it's like 10 minutes. Yeah, you can sum it up in 10 minutes, but I like to go off, guys. I like to just be off the cuff and just kind of, you know, just talk and let it go. So I don't know if 10 minutes is enough, but nonetheless, I'll be doing these video posts very, very soon. And you know, this week I want to get one cranked out for you. So let's get into it. Sheeny is asking about SPY.
The tech company
Let's
NVIDIA
take that one.
confirmed to me just moments ago
Says-
that it is experiencing a cyber, quote, incident, unquote, but not offering many details on what's happening, so it's impossible to say who, if anyone, is behind it at this point, says a spokesman. Our business and
okay.
commercial
All right.
activities
So
continue
let's see. Let's go ahead and
uninterrupted.
take this.
We are still
Sheeny
working
is
to
requesting.
evaluate the
By the way,
nature
Sheeny, how you
and
doing, man?
scope
How's
of
your
the and
how's
don't
your
have any
Friday going,
additional
bro?
information
Hopefully you
to
have
share at this time. So
your Friday's
guys,
going good.
it would be premature to
Everything is
necessarily say this
set for the
NVIDIA
weekend.
incident is in any way
All right,
linked
so
to
the SPY.
expected cyber attacks that
Look,
a lot of people have been focused
this
on
is
in Russia, but they are
So what
confirming
we're asking
something
really about is,
at
you
least
know,
is going on.
what
Back
is
over to
the market doing, right?
Wow, there's a lot to sort through here, Amy.
A lot of
I wanna
people
start
got,
first with the new
especially with
information you've been
CNBC,
providing us about the United States'
people
decision
got
to
very excited and they're
sanction
thinking, oh, everybody bought up
President
everything. People went out and bought, and you know, people bought the dip or whatever you want to call it. CNBC was obviously all over that. The reality is that it was nothing more than a short covering rally. All right, you had usually when the market extends a certain, like maybe 10%, 15%, 20%, you have a lot of computers that will, you know what I'm saying, algorithms, and they buy, you know, they'll start buying or covering the shorts. Okay, and a lot of these computers just trade, and they trigger at certain levels. That's what you had. That's what you had. Now it wasn't just that, though. It's not like, okay, that's it. That accounted for everything. No, there's a lot of everything, but that was one of the major contributors to the buying activity. Okay, is you had the computers that were covering their shorts, and again, a frenzy of orders that just kind of hit the market all around, and everything was, you know, everything was at overextended levels. So that's one of the things that happened. Now, I mentioned from time to time the plunger team, and a lot of people don't know about the plunger team. Okay, but the plunger team, basically they come in and they buy the market. Okay, they try to save the market. You know, there's this new book that came out. I'm not sure. I have it in my list. Wrote it down. I want to pick it up. Actually, I want to get it because I want to share at least the title with you guys. Very interesting title, and it goes into what I want to.
And essentially, by the July 1st holiday, the market had
what I want to talk about here.
roared back about a 5 or 6% increase from where it fell off when we initially heard the announcement that.
I don't know if you watched the Kaiser report. If you don't, you should. Very good channel. The Kaiser report with Max Kaiser. I've always been a fan of Max Kaiser. He's a big Bitcoin guy right now. Very, very big on Bitcoin. But he interviewed an author who has written a couple of financial books. The latest one is called Permanent Distortion. And she talks about how the markets are always distorted. Okay, they're not free markets. We haven't had a free market in years, probably since 2008, and even back then it was still being kind of rigged. But the Fed has intervened so much in this market that what we're seeing is now distortions. Okay, so yesterday, if there would have not been any financial engineering, we could have had like we definitely would have had a crash. We would have had a crash a long time ago. Okay, and it would have been bad. And I still think we're going to have one. I don't think these guys are strong enough to actually, manipulate the entire market. They could do it. And that's what I've been saying. Obviously, we're at that point now where they're either going to give it all they got and get this thing back in an uptrend at the expense of, really high inflation, extremely high gas prices, all of that stuff. So, but the point is that the market is being engineered. Okay, it's not a free market. So yesterday, on top of the algorithms and the computers, you had the plunger team that was out buying a lot and trying to get the market up and prop it up. And that's what we had. We had a propping of the market. So all of this stuff here is, if you look at let's look at Spider right now. Okay, let me switch this over to, and I think it is, but I'm going to put it in Heiken. Because Heiken gives you a good, just nice and clean. Okay, it's a good general overview. But if you look at the market, okay, it is in a downtrend. All right. So until we get back to something like this, okay, where you have a nice uptrend, the market is heading lower. Okay. Now, permanent distortions. They're going to really try to give it all they got to get this market from this back into this uptrend, because they did it over here. Okay, they did it back in like September, and in September and in October they really came in, and you can see what happened. The market started breaking down, broke the 50, and this is where they came in and boosted it up and try to get it back up into the trend that we have right here. And did it work? It did work. It did work. Okay, you see that it broke through the highs and it continued on for a little bit. Okay, then it ran into some more trouble, and right here is kind of where it started hitting. And what happened? Okay, it failed once again. So it ran for a little bit. It's kind of like trying to get a car trying to get a car started when the engine won't start. You give it a little bit, you're going down the street, and then it fails again, right? That's what's going on with the Spiders, man. That's what I think. But the overall market at large, okay, the plunger team is going to come in next week. They're going to, over the weekend, I know they're going to be, plotting and planning, and, what are they going to buy? And they're going to try to push this thing back up to test probably that 200-day moving average, maybe the 50. Who knows if they got enough juice? But you're going to see that. But overall, we don't care about that stuff. Overall, what we want to see is trend, because trend is the most important thing. Okay, all of these people who don't look at the charts, they're getting snapped around, whipsawed around, and it's very hard to trade once you break out a trend. Okay, all of these people who are making money, buying the dip. Again, I said buying a dip, it works when you're in an uptrend. Anyone could make money when you're in an uptrend. Just buy whatever stock. The whole market's going up. Doesn't take a genius. The worst thing that could happen is for newbies to get into the market in an uptrend, because then they think they figured it out. Everything they buy goes up. Worst thing that could happen. So all that buying the dip that was going on here, a lot of people are buying the dip not knowing that we were in an uptrend. Okay, and so when they come out and they watch CNBC or whatever, and they're, I'm going to buy the dip, the market is down big, it still is in a downtrend. It still is in a downtrend. So yeah, you had a little bit of buying because of the engineering. Okay, because of the distortions from the Fed, and you had a lot of these, again, the computer buying. But we're not over that 20-day moving average. Okay, this is a big deal here, that 20-day moving average. The 50-day is even more important. We're nowhere, we're nowhere in that zone. We've failed twice. We had two, failed attempts to kind of break out higher, right around here, at 456. You know, it tried to, it didn't even touch the 50-day moving average, but you had two failures. One here came down, and then again, and it failed. So what do we have right here? We have a little bounce. So let's not get too excited with this bounce. I wouldn't recommend people start buying everything because we're still in a downtrend. You can come up here and, you know, the market could, maybe we're going to touch that 20-day and then it fails and breaks these lows. So we're in a good downtrend right now. So that's why I'm shorting. So my take on the spiders is that we're going to see lower prices. We're in a bear market pretty much on so many stocks, and I think finally the spiders is finally getting there as well. So don't let what happened today or even yesterday, don't let that kind of fool you. We are in a downtrend. Okay, so even though a lot of my stuff got stopped out, it was expected. So that's the other thing. When you're getting real movement to the, you know, whatever, so if you're long and you're getting some real big gains, you want to take profits. That's something I've always said. Take profits, okay? Because, you know, it could come back down, and so take some of that money off the table, put it in your pocket, and so, you know, along with that, you want to adjust your stops, set trailing stops, so that as the market or the stock moves lower, you move your stop. Okay, so you're kind of locking in profits. So even though a lot of stuff got hit, man, a lot of my stuff just pretty much got stopped out of. Lynn, this I got stopped out of, but you know, it was still a profitable trade. T-Mobile, this was not. It went against me, but you know, again, it's you know, it's a small amount. If you're managing your risk reward, you're expecting that, okay, if you do get stopped out, it's not that big of a deal because your winners are bigger than your losers. So Coke stopped out, Match Group stopped out, but have a look at Oracle. So Oracle was a good trade. Look at this whole movement to the downside. And let me zoom in right a little bit here so you guys can see that. So it was still, as it was moving lower and lower and lower, just keep, you know, adjusting that stop, so you're locking in those profits. And oil and gas to Europe causing a recession there. That was kind of have a look at this one, 3M. This was a great trade, man. 3M was an awesome trade. And again, you see here a little bit of a stop, you know, got stopped out, but that's okay. I want to get stopped out before it kind of starts getting back to that 20-day moving average. I want to make sure that I'm adjusting that constantly, just, you know, and trying to take these little movements. So I'm not trying to get the home runs. Again, always just trying to get big movements, but eventually these small movements, these small creepers, they will turn into home runs. Not all of them, you know, maybe anywhere from 10 to 30% of the trades will possibly turn into a home run where you get like a good 20, 25, 30% return or more. But you know, those are just slow and steady. They start off, you're up 2%, you're up 5%, you're up 6%, you're up 7%. Next day you're up, next week you're up, you know, 12, 13%. And those are the ones where you just keep adjusting that stop, just kind of let it ride. And eventually it, you know, you when it does get stopped, like 3M, you walk away with a, you know, pretty nice profit. And that one winner basically covers all of your red. Everything that you were down, that one winner puts that money back in your pocket and then some. So that's pretty much the name of the game. You're not going to try to, you know, you're not going to get every trade right. That's, you know, but those trades you put on, again, like how I always say, just make sure it's a small risk, because then you can take many trades. So I know I'm going off on a tangent here, Sheeny, but the spiders, I'm still very, very bearish. I don't see any. Some of the things that I did today, I shorted. Here, let me see, so I can share this with you. You know what I got into today, but I took a lot of shorts. Shorted. So if rent inflation goes higher, I mean that's going to be more lasting, Ed. Correct. And when so yeah, I'll share this with you, man. a share of the day. Let's see what happened today. So Honeywell, okay, Honeywell was a stock that that I was in, got stopped out, pretty much flat. Okay, Cintas was in this one, got stopped out of this one. This was a loser. FDX, great trade. Okay, this one got stopped out of, walked away with my profit. Walgreens, another one, pretty decent one. Okay, stopped out, but again, money in the pocket. 3M, we talked about 3M. UPS, this one got stopped out, took a small loss. Then of course my options, which is more your game, but my option on 3M, that one was green, and also took closed out on my Coke position, so this one was green as well. This Under Armour, this was kind of going against me. I did not take a position in Under Armour. I just bought the option. So this was not anything I picked up shares on, and that one pretty much hit my stop, and I just closed out of the. I closed out of my put, like if it was shares. So that was another put option. All right, so Apple, shorted Apple, and it, again, it could go, who knows, but it's, it's starting to turn here. If you look at the trend, see here, you got, and let me switch this back, and I'm actually going to put it to the open, high, low, close bars, okay, because the candlesticks have been just kind of distracting me. But anyways, nice, everybody went out and got crazy. Well, not everybody, but the computers bought this thing up. Plunger team, okay, if they continue to move this up, again, I'll get out of the way at a small loss, but shorted pretty much right up here on Apple, like right at the tippy top. So that would be cool. This thing kind of comes back down, breaks these lows. That could be a great trade if it does that. Home Depot, this is another one that I kind of ran with. I wanted to short Home Depot anyways. Okay, they had earnings, but I wanted to short them even before. So you see here, the next stocks that is reporting earnings is Comcast. So I got to get out of these. I have Comcast, Dr. Pepper, McDonald's all reporting. Oh, that's not for a while though. So all right, so let me get back into it though, so I don't lose track. Apple was a new short that I put on the table. Home Depot was a new short on the table. IBM is a new short. Or no, I've had IBM. Sorry about that. Nike is a new short. Procter & Gamble.
Yeah, of course, that is a national security question that's been playing out for a number of years as well, Ed.
And Procter & Gamble.
Watch this nearshoring and reshoring trend.
I'll get out of this one on Monday because this one pretty much would have hit a stop. Okay, I don't really. So Procter & Gamble was just trying to get in there for a short, but it did kind of move past where my risk would have been. So I'll get out this one on Monday. And ACN, another short. Bank of America, Colgate, Procter & Gamble I was in, but then this one hit the stop and got stopped out of Procter & Gamble, which should have did the same on let me see here, which one? Yeah, Procter & Gamble. That one I was in, and I got stopped out of that one. And then I'm also in Capital One. And last but not least is Dr. Pepper. That was the last trade. So overall, eleven positions on the table. And and we'll see. Okay, so these are pretty much, we'll see what how next week unfolds, and we'll get into that. So again, with spiders, let me just rate that. I am bearish on the spiders. I don't see anything really kind of happening that's good until we change trend. Until then, I say, we'll continue to see the market head lower. Sorry that you got burnt on SPY, man. Like I said, I got stopped out. So you weren't the only one, brother. I got stopped out on a lot of things. You saw when on Monday, my video on Monday, my portfolio was loaded up. Okay, I had like 18 positions, and yesterday, half of them, like 9, 10, boom, just all stopped out. It was a really big pop. But that's why you got to, if you're trading, make sure that you lower your, as you go further and further into green, make sure that you're moving that stop. It does help, because at some point you get to that point where the trade is, you're not even risking anything on the trade. If you get stopped out, you put a little bit of money on the pocket, or it's pretty much flat. So, you're not, there's no more risk on the trade. So that's, and that when you get to that point, when you get to the point where you're already green and you move your stop and now there's no more risk, that's when you should be, or that's when I start looking at taking profits. Once I'm at that point, I want to start taking profits just in case you do get a reversal or the stock moves against you, and you get out. At least you got out with some money in your pocket. Okay. I'm not, like I say, I'm never trying to hit the highs and the, nail the tops and the bottoms. That's impossible. That's that's just not a good way of playing the market. You'll lose more than anything. But those middle positions, that's what you want to try to get. You know what I mean? Like just anyways, when you get to that point again where your position is now in the green and you lower your stop and now you have no risk, now it's just like kind of like a free trade, that's good to start taking profits as it moves more and more. When you're up 5, 10, 15%, I like to do at least 20%, sell 20% of my position and put that in my pocket and keep doing that. So eventually the stock is going to move against you and you are going to get stopped out, but at that point, you've done pretty well. And again, I refer back to like my trade on 3M. Okay, 3M was a good example. All you need is like, one good winner like that, and it's gonna completely just, it's gonna do well for the book. And all the little small stops all the stocks that you get stopped out of, maybe down, I don't know whatever the percentage, but for me it's like anywhere from 1 to 3.5%. All those small little trades that didn't work out, the winner erases all of those losses and shoots you straight into the green. So this probably was a trade of the week. 3M was a really awesome trade of the week. So that is pretty much it, man.
Well, the Fed could raise its little federal funds rate now.
Let me see here.
1/4 of 1%. It could raise that rate.
I'm gonna take a quick break for a second, and gotta get some chapstick, guys, because my lips get really dry in this Texas weather. I'm not used to it. So I'm gonna take a quick break right here, guys, and I will be back in a second, and we'll see what else is good. It's a pretty chill day. We'll see how it goes, but yeah, I'm gonna go ahead and take a break right here, and then come back in about 5 minutes. So it can calibrate the desirable rate. Now, Taylor said
proceeded. On the other hand, he and Putin are unified not so much by their common interests.
Okay, guys, I'm back. Take a small break. Man, today is kind of like a slow, really slow day. A lot of my stuff just, again, it gets stopped out. It's super cold down here. It's like in the 20s, and I'm not used to that. So I've just kind of been chilling all day, but there really wasn't anything going on in the market, guys. Tired of hearing all this, all the talking heads. Oh, Russia. This day was coming, man. This crash was coming, and it was, again, there's been a conflict. They've been having issues for 8 years. So as usual, the market needs a scapegoat to blame it on. So now it's like Russia, this. The whole point of all this, guys, is because the talking heads want to get you emotional. They want to get you and I emotional, and that's what they're working. They work these emotions and get people excited, get people either panicking or get them, euphoric over the market highs. And they know the language. They use all the, the colors, everything that they're using. They know how to manipulate and to get people emotionally buying in the market. Now, there wasn't a lot of that going on. As I said before I took the break, a lot of the stuff that was going, a lot of the buying that was happening, there was a lot of computers that were doing the buying because the market was so overextended. Once it hits like 15-20%, you have computers that trigger a mess of orders across the board, and they kind of serve as like kind of like a cushion in a way, okay, to kind of curb the fear. And so you have a lot of these and they buy and sell extremely fast. Humans can't compare. They're buying, selling, and it's creating a flood of volume. I mean, you could probably do I don't even know how many trades in 1 minute, maybe 25 trades in a minute. That's how fast these computer algorithms work. And when you're trading a really heavy, mega cap, mega corp stock, like, I don't know, Bank of America or even the spiders in general, the index in general, they can absorb that kind of liquidity. So you can trade massive amount of shares in a minute and start creating volume, and you plug in the media to that. So now you have volume, you have a little bit of buying coming in, and the media's out playing it for what it's worth to try to get some of the retail suckered into it. But again, you also have the plunger team behind all of that, and the plunger team is actually buying as well. They're right behind the computers, or many times they're in front of the computers, and they're buying. Sum it all up, guys. That's what this was all about. So it's just boring. It's like, the news gets all excited over this nonsense, but it was just, it was just a bounce. We're still in a freaking downtrend. What's changed? Nothing. Nothing has changed. So anyone who's really getting excited right now or buying up stock right now, I don't know what to tell you, but sorry about that. But if we look up, let me skip this here. If we look up the spiders, you can see here. And again, I'm going to go into my Heiken Ashi because that's just a nice general way, get the news out. Downtrend. Okay, you see this. It all started right here. Okay, this is where it all started. You got your high, failed, broke through the 50. When it tried to get back up, it made a lower high. What was after that? You had a lower low here. Well, you had your low here. It broke that lower low, came all the way down. You have your first or your second lower low here. Comes back up, tries to rally, never makes it up to this top as it was back in, the 12th, and never makes it up there. Instead, it fails right here on the second and moves sideways, tries to do it again, fails, and then comes down. So what do we have today? Same thing, just a little bit of a movement. There's nothing to get excited about these, Actually, I would say I'm seeing right now on CNBC, they're talking about crypto in Russia. That's actually one thing that does get me excited, is the crypto. Now, you guys who watch, I know Sheeny and I know you guys are really probably a little bit more believers in crypto. I'm not so much because I think, you know, again, I just think the Fed will do their shenanigans to try to stop crypto from creeping in on their territory. But anyways, that being said, what's going on right now, I think, is very, very good for crypto. All of these sanctions, which I think is crap. Okay, my daughter watches, so I got to watch my language, but also my dad watches these streams, so don't want to you know, I don't want my daughter hearing me kind of go off with the potty language. I got to keep myself in check. But nonetheless, look, guys, all of this stuff, these sanctions is crap. It's complete nonsense in my opinion. And I think, what's up, Stash? How you doing? I think that what you have going on right now is not going to do us any favors. I don't want to step on anybody's toes, but I think Biden is a complete fool. Okay, I don't think no one respects him. You know, and I don't think Russia, you know, because immediately what happened when they did the sanctions? Did that stop Russia from kind of going in there and doing its business? No. They did it anyways. These sanctions are just gonna, you know, they're going to hurt us, okay, because it's going to cause higher prices regardless, you know, because across the board. But going back to crypto, it's going to open up an opportunity where countries are going to say, you know, China is looking at this and saying, well, how could this affect us? They can run sanctions on us. The other thing too is that what if China sanctioned us? What if China says, you know what, you guys, you know what, I'm going to ban all Chinese companies from doing business with the United States. They would cripple and destroy our economy. They could do that. China has the weight and the strength to do it. So I don't believe in these sanctions. I think Joe Biden over here, you know, I'm going to sanction Russia and, you know, very proud of it. He does not know that he's opening up some type of a Pandora's box, maybe, because once we get into sanction versus sanction, like I said, China can shut us down any day with a sanction. We, you know, cripple, destroy our economy in a week. Okay. Just by doing that. So, this is what is, you know, gives a benefit to crypto. Because maybe, you know, with crypto and Bitcoins and all this stuff, it's a way to kind of these central banks who are doing these things, you're going to have money that's flowing in and out through crypto. And I think, you know, I think that's a good thing. I don't like these sanctions, guys. But I'm getting into the politics, guys. And you know what? You can't help it, though, right? You can't help getting, if you are trading, if you are, you know, involved in the financial markets, you can't help but be aware politically, because the political world affects the financial world. So it affects your money. Everything that these idiots are doing affects our money, for good or for bad. Hopefully for good, if we can read it right. P says, what's your take on the divergence in your MACD and stochastic versus price right here? What is this for the SPY? Are you not going to be bullish until we close and hold the two? Okay, that's a good question, Stash. Let me find that there's a top for this chapstick. I'm just going to keep it here because I tell you, man, like this chapstick is it does me favors, guys. Anyways, enough about chapstick. So, okay, all right, here's the thing with the spiders, okay? I'm not going to be, it's not even about the moving averages. I have them there and they are important, but they're not the end all be all. The most important thing, okay? And I'll just kind of do this right here, because it is all that matters. This is the most important thing. You don't really, I mean, moving averages are good. I use those because, you know, there's information there. But at the end of the day, it is just the price that matters, okay? And when you get, let me see here.
So what do you think about the rally we've seen in the last few days? Is this a dead cat bounce? As I've been asking,
let's do some Fibonacci.
the last 2 hours.
Okay.
or
Well,
is
actually, no.
this
I don't want to do
rally for real here?
Fibonacci. Let me just.
So the context for yesterday's rally off the low was a
Let's
market
see
that was very
here.
oversold, sentiment that was getting very dour by looking at the investors' intelligence numbers, where bears are almost exceeding bulls. The AAI number that came out on Thursday, where bears were above 50.
All right. So
we
you
were
see this
looking for
here.
some sort of flush out, and
That's
we certainly got it.
what we're in.
To me, it's just temporary.
You
The
could
biggest
get
risk
a little bit of
is
movement
not
here,
Putin,
but
it's Jay
we are
Powell,
still
it's
in
Christine
a
Lagarde,
downtrend.
it's Bailey
So
in the
again,
UK. To the
we
extent
take out
that
all the
we have
moving
this
averages
synchronized
and we're just
monetary
looking
tightening,
at the
and we're
actual
really just entering the teeth of it.
trading of the instrument of the spiders of the index or whatever stock you're looking at. Okay. To me, this is all I'm looking at until this
You were really very early to the game in terms of
does
identifying
this.
it and getting concerned about it. Tightening would be a good thing
Oh,
to
what
get that in control. No.
Okay. Until we get this.
Yes. So over time, no question, we need low inflation to have sustainable,
Right here.
healthy growth and maximum.
That's
employment. And of course,
that's
that
when
was
I'll be
turned
bullish.
around. But yes,
Because
over
that is when the
time,
market
we
is
need to
telling
get
you
out of this-
I am
this
going
low
up
rate trap that we're
and I
in.
want higher
Unfortunately,
prices.
you
This is
can't
what
do
this is
that
telling
in
us.
a painless way.
Now we don't
There
have that.
is
If
an
I
adjustment period
if
that
we
needs to take
rewind the
place until you
clock
get from
here,
here
just
to
kind of
there. The one
let's do
problem
that. Let's
with
kind of put it
the
right here,
Fed's
right?
ability to deal with inflation is if you look at the last 40 years, every tightening cycle
Let's
ended at a rate below the
all right. So you
previous
see
peak
here as we're
of the
in
tightening
an
cycle,
uptrend on the
which
spiders,
implies that the Fed
then
is
we
only
started
going
we
to
broke
get
into a
the Fed
downtrend right
funds
here.
rate to
This
1.5
was
to
when the
2%
reversal was going on
before something
right here.
breaks.
Okay.
The
It
problem is
wasn't,
something
you know,
may
so
break
you might have
while
had
inflation is
some
still
big
very
days
high,
right here if you kind of
which
zoom
would
in,
create a real problem
right?
for them.
You had a nice big day here, okay, but it still was in a downtrend, okay. I mean, you know, because there was people buying, but never broke that trend, okay. It was still kind of moving lower. It wasn't until boom that day right here. This is the kicker. This is when I would say, okay, I'm bullish. I'm bullish now, okay. Well, I wouldn't. This is when I would start saying, okay, it's time for me to close my shorts and time for me to consider being bullish right here, okay? Because what happened? You're in that downtrend, but it breaks it, okay? And I'm going to show you how it does that. Right here, if we draw a resistance level, it broke it. Damn it, I'm moving my things all over the line. All right, so it broke the resistance. Not only did it break it, but it closed above the resistance. If it does not close above the resistance, then it was a fake out. Okay, it was a fake out. But on this day here, it did break above and held above resistance. And from that time on, look at what we get. Okay, no moving averages. No, just looking straight up at the price. We have lost the downtrend. Okay, we lost this downtrend down here, and we're now in an uptrend. Okay, and look at see how nice it kind of carries that uptrend. See, it just kind of carries it, and all you keep doing is you just kind of keep drawing this. You know, you have to kind of. You'll see when it's going off trend, okay, because you're connecting these lows and whatnot, okay. But for the most part, you know that all right, it's drifting off trend a little bit. So right here is when you start watching. Did the index hit a top? Okay, because it failed. It failed to get above. Okay, it's failing to get above 470.75. This is just a quick lesson. Okay, and now we are moving sideways, and look what happens. We get this huge down day. So we can clearly see that the index, the spiders, have lost the trend. It's gone. The market sentiment is gone. So right here is when you should start, you know, the light bulb should start going off that the index is getting off a trend. And right here is when you should know, okay, something's happening. Until it breaks up higher, something's happening. So if you follow it, look at that. Okay, here's our first lower low. And again, I'm just gonna doodle all over the place here. Okay, so here's our first lower low right here. Okay, this was our first high that it failed to break out. And look, let's delete all these so we can get a nice. Okay, so this was the first high that it failed. This was the first lower low. Is it going to move sideways or is it going to break? Let's see. Let the market talk to us. Let's see what it's going to do. Well, now it's puncturing it. It's holding above. but now it's breaking under. So now we zoom out and you can clearly see that the trend line that we had, okay, over here, this trend line that we had over here is gone. It broke through right here, and now we're having problems. Okay, so the buying that you were doing over here, you're not, you know, all the people who are buying on the dip right here, it's working out. But now the market is lost its trend and the mechanics has changed. So you wouldn't treat it the same way. You would not treat it the same way. And again, look at this. You know, it did bounce up, but it's failed at the high. Okay, it's failed to get it. Look, it tried again. Okay, back over here on the 22nd, it tried, failed, came back, tried, failed. Okay, so now we are in a trading range. Okay, and I'm putting it right at the end of the tail. Okay, so this way you can see our channel. We are in a trading range. It did break out on this day. Good news. All right, so on this point on here, I would have been bullish because now it's breaking out, and it's not just breaking out, but it's holding it. So here is the day that I would be bullish, and look at what you kind of get. Okay, it drifts up a little bit, comes back down. So maybe it was a fake out. You're not going to get it right 100% of the time. Okay, sometimes they're going to come back into the channel, but if you're looking at this, this is kind of your guide. Okay, and what happened here? Boom, big day. Okay, so now it's breaking down. If you rewind the clock, you can see here that now this was pretty much sideways trading. So all of this trend was gone. This trend here was gone, and now we're in a kind of a downtrend. And look at that nastiness. Okay, so why would I be bullish right here? You follow me? Why would I all of a sudden be bullish? Oh, the market is, even if the 200-day moving average was right here, why would I be bullish? The stock is still in a downtrend. I mean, you know, if you have a pretty decent vision, you know, I don't have the greatest vision, but you know, I can see clearly what's going on. Look at that. It's in a downtrend. So if we're going to get excited, let's at least get excited once it breaks out of this trend, which it's not doing. It may not do that. It could go sideways. It could kind of pop up here. We don't know. But all of this nonsense that these talking heads are talking about, oh, oh, the market had a great reaction. This is a shitty reaction. Pardon my French. Okay. This is garbage, guys. This is nothing. Anybody who's buying right here is, in my opinion, this is just really these are probably people trying to catch things at the bottom. Okay, like they're trying to catch it, which is pretty much a losing game. Okay, most people do that. They end up, you know, they don't trade for very long. It's very hard to do that. Anyways, I don't want to step on people's toes. What I'm trying to say here is that this is nothing to get excited about. Okay, so I'm not going to be bullish until it breaks this trend. Until it moves to the upside, reverse of this, it's bearish. This thing, the market, and this isn't me saying it. It's not like I'm saying, oh yeah, this is the market telling us. This is not even, you know, this is just clearly the numbers that are telling us. And, you know, the numbers are making the story very clear for us just looking at this. So I'm not going to be bullish until we get an uptrend. And, you know, everything is pretty much down. Let me look back again on the chat. I don't want to ignore you guys. I go off on a tangent, man. So all right, you like the trend line explanation, but let's look at the price of the breakout you'd buy at 435. No, it's okay. Well, let me read the whole thing. Do you not think it's worth being more aggressive and buying the double bottom of the uptrend in the diamond area? Wait, let me see here. Do you not think it's worth being more aggressive and buying the double bottom of the uptrend? Okay. The thing is, this isn't a double bottom. Okay, a double bottom is when they like actually are hitting the same. Okay, this is the bottom. If the stock came down and touched this point, rallied back up, and then came down and touched it again and rallied, that's a double bottom. This isn't a double bottom. This is a lower low. you know, here, because here's your first kind of low here. Okay, there's your first low right here. Here's your first low, and this is your second low. So it still is lower lows and lower highs, because then actually you had a double top right here. I mean, it's not exactly so, but you basically, at this point right here, this is where you had a double top. So the test is here. This is the test. The test isn't right here. Like, if you're buying right here at the bottoms, all you're doing is you're still buying in a downtrend. The stock is moving against you, and all you're doing is buying as it kind of dips down. You're buying at the bottom. It's going to push you up, but it's going to fail at the top and carry you down. And that's where people get killed. That's where people get killed, because they think they've nailed the bottom, and then the stock goes up, but it didn't even make a higher high yet, guys. You could wait for that higher high. Here's where it failed twice. Up here at 459.45, failed twice. Boom right here, boom right there, failed twice. Okay, and again, here was our lower low. What happened? It took out the lower low. Okay, and it took it out on Wednesday. So now we have a new lower low right here. Okay, you know what's going to look better? Look, this is our lower low here. Okay, this is our lower high. Okay, and then we have another lower high, another high here. This is where it failed. Then we get an even our I don't even know, what is this? Here's our first lower low. This is the third lower low. Okay, and this is the first lower high, second lower high. So we haven't even made, we need to let the spiders make their third, right? Is it? Yeah, about their fourth. Okay, because here was the first time that it tried to break out and it failed at a high. Let's put an arrow there to kind of give us indication. Okay, here was the first time it failed. Then it came back up to a high, failed here, moved sideways, tried again, failed. Then it moved lower, and it took out the lower low. Okay, and now you have here is basically and I need to get my pencil going on my so I can write on the screen. I haven't plugged that in just yet, but anyways, you're getting the lower highs and lower lows. So don't get excited until we break this point here. Okay, so this, look, it still has a lot to go, man. This thing, the spiders, needs to go up 6%, break the high, and hold it. Once it does that, it's clearly out of the downtrend. Okay, if it comes up here and fails and it moves sideways, well, then maybe we're not in the downtrend, but we clear as day are in a sideways market. Okay, and it may ping pong back and forth between the high here of 419 or 450, 459.14, and the low here of 410. Okay, so it may ping pong. So this is where we're at. We're in a channel. So people buying right here, if you are a buy right here, what you want to look for is, as it moves up, be aware that it doesn't fail at the high and move down, because what's going to happen is if you're buying here and it moves up, fails, it's going to come back down and break this low. And that's the trend. You're just going to get caught with the trend. It's not anything more than that. So hopefully I'm not confusing any of you guys, but that's how I'm playing it. And shout out to Harry Odell 55. What's up, Harry? How you doing, man? Welcome. Thank you for chatting, first time chatter. And Harry says, I'm pretty bearish in my opinion. I was bullish 4,200, 4,100, but I'm a counter trend trader. Okay, there's nothing wrong with that. Okay, there are people who traders who are very good counter trend traders. I am not. Sometimes I am, sometimes, but for the most part, I'm a trend trader. I'm kind of going with the trend. But listen, you can make money in both. You know, it's not like, you know, one is over there. You can make money counter trend trading as well. I don't really do that often. Sometimes, again, I do. But you could have two traders trading. Okay, one could be long, one could be short. One is a trend trader, one is a counter trend trader, and they both can make money, even though they're going kind of different directions. Okay, because they have their risk management, they have their trading system, and they're not kind of deviating. They already kind of know and have their way of trading, and they're sticking to their rules. So yeah, I don't really do that. But I wouldn't. Where I am counter trend trading is when stocks have really hit that bottom, and now they're kind of moving, they're moving to break out into a new trend. That's usually where I kind of go counter trend, because I kind of feel like, okay, the trend has been so far, is so hard to the downside. It's been weeks. And the fact that the stock is moving sideways, now that it's moving sideways, if I get it at the, that's when I'll think about, okay, maybe I'm going to buy. Okay. But anyways, that's here nor there. Most of my positions right now, I'm just all going with the trend, guys. Sheeny says, I can clearly see now. My lines are drawn. I can see the downtrend. That's in my way. Yeah. You meant, again, you can make money counter trend trading, but the thing is, you're in the position less. It's like a swing trade, okay? And for the longest time, I'm saying, oh, I'm a swing trader. Really, I'm not so much a swing trader. I mean, I'm trying to hold from anywhere 1 to 3 months, but because I'm adding to my position and kind of like scaling in and pyramiding and then taking profits, I'm really more of a position trader. Looking between 1 to 3 months. That's ideally what I'm looking to trade. And it's not like I'm just one time in and one time out. I'm looking to get in, average my price, scale in, scale out, and not just take one position, but take many positions. That's why if you see on my book here, you can see that, I have McDonald's, I have Colgate, Apple, I just shorted, right? I like to have a team of players, a team of stocks, and kind of, this is where money management kind of gets into play. Manage your money so that there's a lot of positions, kind of working for you, okay? Because the chances for you hitting, a good return are higher when you have more positions, in my opinion. If you have 10 small trades, and one of them does well, not just one of them, but hopefully a few of them. But when you have 10 positions, okay, you're able to manage those. You're not just highly concentrated in one, stock. You're not putting all your capital behind one stock and getting in on one entry and getting out on one exit. You're able to kind of massage your position. And again, adjust your price that you're kind of getting into the stock. You're averaging your price so that if it goes against you, you're not fully 100% in. If you get into a stock, you start off with like maybe 30, 40%, or sometimes maybe you just kind of throw 20% in there. It's like cooking. There's not precise, it's not baking. It's more like cooking. There's, my wife went to patisserie school, and, she would always tell me, you're more of a baker. And I would say, what do you mean I'm a baker? And she'd say, yeah, you're more of a baker because you need me to tell you the exact measurements. I'm not a great cook, by the way, guys, but she would tell me, you need me to tell you the exact measurements. So, how exactly this is how much you add of flour. This is how much you add of milk. This is exactly how much you add of butter. This is exactly what you turn the temperature to. So baking is very precise. Okay. Whereas cooking is not so precise. You can, it's more, you taste it. Oh, it needs a little bit more salt. Let me put more salt. Oh, let me put some seasoning, some spices, but it's more to taste. So one chef is going to cook very differently from another chef because they're kind of freestyling it. They know what they need to put in, but there's not exact measurements. And that's how it gets for me with my trading. Sometimes I may say, you know what, this position looks pretty good. I'm going to start off with 20%. I'm going to just kind of, I'll start off a pilot position, 20%, in there. So instead of buying 100 shares, okay, I'm only going to, maybe I'll start off with 20 shares, just as an example. And if it starts going in my favor, great. All right, I start off with 20. I'm going to throw another 20 in, or maybe I'm going to go with, 40 shares. Maybe I'll go a little bit heavy on it, and slowly kind of scale in that way. And as I was mentioning to Sheeny, a good rule of thumb. Okay, I got stopped out, guys. If you're just kind of coming into the channel, I got stopped out yesterday of like half of my positions. I was in 18 positions. 9 of them, probably 10 of them all got stopped yesterday. They got stopped out, okay? Because as the stocks are moving in my favor, I'm adjusting my stops. Okay, I'm adjusting my stops just in case they pop and run against me. At least I already have money in the bank. At least I already have money in the pocket. So I'm not going to let a loser or a winner turn into a loser. That's what we don't want that to happen. So I move my stops. I adjust those stops. But when you get to that point where you take a position and you move your stop, and now you're like, damn, if this stock hits my stop, I'm actually still in the green. I'm still making a profit. Once you're there, once where there's no risk at all on that trade, that's the best way to trade, because you're not really fearful. At that point, it's like I already, even if the trade goes south, I'm already going to make money on it. I'm already green. So at that point, a lot of the emotions, if you do have the emotions are pretty much gone out of the trade, and you don't mind letting your position sit there and the stock just go lower and lower and lower. You're not, it's the risk is pretty much gone. But when you get to that point, it is a good idea to, as the stock moves 5, 10, 15% in your favor, take money and take profits. That's what I say, because it's already a risk-free trade. So if you're up 5%, take 20% of that 5%, put in your pocket. If you're up 10%, take 25% of the position. If you really feel like, I've been taking profits on this, I'm going to take half my money, take half your money. But you always have money that's riding for you, and it's completely risk-free. So that's where you want to get to. That's why I say I'm more of like a position trader. It's hard to get to that point if you're just like, okay, 100% in this stock at this price, and then I'm going to get out here. It's very hard to do that. You can do that, okay? Shout out to you guys who are doing that as well. You can do it, but I kind of find that, it's easier if you kind of scale in, because this way you're really putting your money behind the stocks that are working for you. If you have a position in, I don't know, Comcast, okay, and you're like, wow, for the last 2 or 3 days, this stock has been doing really well for me, whereas the other ones haven't. Well, then, put more money in it, because again, what I'm looking at, and this is me, okay, but what I'm looking at is this trend. The more it goes down, the more I want to be behind it. So as it goes down and it breaks these lows, I'm going to add to my position. Okay, so let's look at the spiders. Okay, here was the low on the spiders. If you kind of started your short here as it broke the low, okay, and then it broke, you could kind of scale in, you could kind of keep going in, and then as it moves up against you, as long as you're moving your stop, if you do get stopped out, it's not going to be such a hit, and you may even get to that point where the trend has given you so much movement that now the trade is actually completely risk-free. And now again, even if you get stopped out, you're making money. So that's kind of where my goal is. But again, I'm going off on a tangent. Let me get back to the chat. Let's see what we're saying. The first drawing you did, P-Stash says, showing the uptrend, not in the current area. When you were back testing the lines, P-Stash, you drew lines and you said that this is where I'd be buying. It was scrolled back to October, November, I think. Okay, well, we'll do it. I'll do it on another stock as well, so you can kind of see it. I can kind of show you what I'm looking at least what my eyes are trying to catch, the movement that I'm trying to catch, because there is a lot of it is timing. I want to get in as in that snap where something happens. That's kind of where I want to get in. But you said, I think the time frame differences, you're working on a much larger. I'm working on the daily. Okay, that's pretty much my time frame, looking at the dailies. So not really kind of moving. Before I would look at the 15. But I don't want to confuse anybody, because I know that was confusing some people out there. Like, well, are you trading on the 15? Are you trading on the hour? Are you trading on the day, on the week? I don't get it. I trade on the day. So to make matters easy, and I think, the best way for us learning is that, let's start off simple. Let's not overcomplicate things. Let's start off very simple and you can learn it on the day. The day is what I trade. So I leave it right here. That's my time frame. But again, I'm trying to ideally 1 to 3 months is what I would try to get in. Now, do they all get there? No, they don't. But when you do catch that winner, okay, when you do catch that fish and you hook on that fish and you're reeling it in and you know you got a big one, those positions, when they do last 1 to 3 months, that's where you make your money. Okay, because you the whole trend it's almost like you've captured the majority of that trend. You could be in the stock for a whole year, okay, as long as that trend is there. And that's the beauty of it, man. The beauty of it is that it's like a sailboat, okay? You just kind of, we just put up our sails and the wind takes us to to where we need to go. The wind takes us to our destination. We're not even really trying. We just kind of sit back, relax. We don't need any power. The wind kind of does it for us. And that's kind of where when you get to those positions where the trend is the wind and it's just kind of blowing profits into your portfolio every day, that's where you kind of want to be. Now you're not going to get those you're not going to get those, but that's the aim. If you put 10 positions and just one of them, does that, you've made all your money. All the other 9 trades, they don't even matter. If you did great on the 9 trades, that's great. But that one winner kind of just, covers everything. And so that's where I go back to saying, you don't need to have like a very high win ratio percentage. When people say, oh, I have an 80% win ratio, I'm usually very skeptical. When they say that, because it's like, you're winning 80% of the time. I want to know what's happening on the 20% of the time. Show me the losers. Okay. So in a way, I'm kind of negative like that. That's how I'm more of like the very skeptical. Okay. I'm more the glasses kind of half empty kind of guy. Okay. Like, if you're telling me that's great. I don't want to hear about your winners. I want to hear about your losers, and I want to hear about the amount of time you're losing. Now, if you're like, well, my average loser is 10%, and but I'm only down, I'm only losing about 20% of the time. So, okay, well, that's pretty big. But 80% of the time I'm winning. Well, what are your winners? Oh, about 3%. Okay, so great. So all you have to do is have a string of losers and you're going to be down. So it's probably better for you to reverse that and do exactly the opposite of what you're doing, because your losers are bigger than your winners. It's better to switch that model, turn it on its head, and actually, trade that way, because it's not about the amount of time that you're right. It's really about the amount of time or the amount the amount of money you're making on your winners versus the losers. That's all that matters. Now, of course, you do want to look at the ratios, but when people just start off with that 80% win ratio, 90% win ratio, you got to ask yourself, okay, what about the other 10? Okay, what's that? I want to see those averages, because really, some of the best traders in the world are only right 20. Well, yeah, some of the best traders in the world are only right 20 to 30% of the time, and they make a killing. They're only right 20% of the time, 30% of the time. How do you do that? You just make sure that when you're right, you're really clocking in a lot, and all those little losers you have are little. They're small, small little losers. And so when people do things like dollar cost averaging, that's why I'm very against dollar cost averaging, guys. Very, very. I was in this industry for a long time. That's something Wall Street uses. Most of you guys don't know this, but that's how a lot of brokers and financial advisors get you to put money in the market when the market is down, flat, or not doing anything. Okay, there's nothing to get you excited. Like, seriously, if your broker calls you, there's nothing to get excited. There's no great stories. The market's down. So how are they going to get you to put money in there? They got to create a story. And the story is, hey, listen, that stock that you bought at $400? Yeah, I know it's down to $300, but that's great. You should buy more of it because it's down at $300. And if you liked it at $400, you're going to love it at $300. That's crap. The stock is down. You want me? It was a loser. So that's Wall Street's way of kind of reverse psychology and suckering people into putting more money in. Because then they say, yeah, but you're going to get a better price, because if you bought it at 400, you buy it at 300, you're about 350. So you're going to get it at a better price. All you've done is add to your losers. That's all you've done. You've increased your exposure in a losing position. You should have got out when it hit 350. And then your broker calls you at 300 and say, hey, you know what? We got out at 300. The stock is cheaper. Or we got out at 350. The stock is cheaper. Now it's trading at $300. But in people who do that, though, don't have stops. That's the other thing. If you're trading without stops, it's a matter of time before you're going to really, really get hurt and destroy yourself, because you don't know when you're going to get out. Like, where do you get out? For me, I know where I'm getting out before. I don't know what I'm getting out of the stock. I don't know how much it's going to put in my pocket, but I do know how much I'm going to risk on the position. I'm only risking 1%, 2%, 3%, 5% is where I'm kind of like scratching my head. Like, I don't know if I want to take this trade. That's a lot, 5%. But if I see a trade that's like, damn, I'm only risking 0.5%. Hell yeah, I'll take it. I'll take 10 of those trades. I'm risking 0.5%, and what's my upside? 10%. I'll take that. I'll take it. I'll take it because the odds are in my favor. So that's kind of how I try to trade it. You could have a string of losers, guys. You could have a string of losers, but I'll tell you what. It's very hard. And if you read the Turtle Traders, and if you don't even read it, just look it up on YouTube now, guys. That works just as good. But, watch these interviews with the Turtle Traders. These were like, just a lot of these guys had no experience in the market. None. Some of them were like, I think one of the guys was worked as a trash can collector. He was just worked for the garbage disposal or something like that. There was a teacher. These were blue collar people. Okay. Some of them had some college, but the majority of them didn't. And it was a bet between Richard Dennis and I forget the other guy's name, but it was kind of like that movie Trading Places with Dan Aykroyd, Eddie Murphy. Is that what it is, right? You guys know that famous movie, right, where they have a bet that they can take the poor black guy and like kind of make a bet and turn him into a rich guy and all this and that. It's been a while since I watched it. I want to watch it because it's such a great movie. But, Richard Dennis had the same thing. He said, you know what? This was the argument. The argument was that are great traders born, are they just naturally, they just have the instinct? Is it something that they're born with? Or is it something that they learn? And Richard Dennis said, no, this is something you learn. Yeah, you might have it. You might just be a naturally good you might be naturally good with numbers, like how some people are very good with math, and they're just naturals at it. But is this something that can be taught? And I forget the other guy's name. They were friends in the firm, and he said, no, you can't teach this. This is something you can't teach, And so Richard Dennis and him made a bet. They said, you know what? I bet you I can take a couple of people off the street, guys and girls off the street, and teach them how to be amazing traders. And not only amazing traders, but I can teach them how they can they'll be the greatest traders on the street. They will outperform the S&P 500. They'll be, great fund managers. So what happened? Well, they said, all right, cool, let's do it. Let's take a bet. Let's do it. So Richard Dennis put an ad in the paper, and, it was just kind of, putting it out there. Hey, we're looking for some people, whatever. He didn't say who he was because he knew that this would create a lot of noise in the market, especially a lot of the funds and the traders who would see this. They would jump all over it. So he kind of just, it was a very mysterious ad, but, he got people in the room and he taught them how to trade, and they did. One of the best traders was, I think, Curtis, forget his name. He wrote a book, The Way of the Turtle, okay, where he talks about his experience being taught by Richard Dennis, and how he learned it and how he actually started doing his own thing. He was one of the greatest of the turtles. He had an amazing average, and so he wrote his own book about it. And that's the other thing, guys. They reveal what they did. Okay, That's why we should read it, or at least again look on YouTube, because they're not hiding their secrets. They're telling people, look, this is how we traded. This is how we trade. This is what we did. And you know what? It works. It still works. I don't trade off of that method completely, but a lot of those concepts I use, and a lot of those concepts were being used by other great traders, even before them. So, look, I don't want to lose my thought here, but what I'm saying is this, okay? They were trend traders for the most part, okay? But here's where the psychology kicks in. If you trade and 8 out of 10, you're going to be wrong, and you're only going to be right 2 times out of those 10, only 20%. It's very, very hard for most people to do that, even if they knew this was a winning way of trading. If they knew, if I trade this way, I will make $1 million. I will be outperforming the S&P 500. I'll do great in my positions if I just trade this way. Psychologically, it's hard for people to take loss after loss after loss after loss, 80% of the time. It's very, very hard. So, but that's what made the traders the turtles so great, is that they didn't let those losses affect them. It was just like, okay, I'm down. Boom. All right, no big deal. Let's take this trade. Okay, I'm down. No big deal. I'm down. No big deal. It didn't emotionally affect them. They just kind of just kept on trading. And then when they would get those winners, they were huge winners, big time winners. They only needed 20% of the time to hit something, and their whole year would turn green just from 1 or 2 trades. It's amazing how it works. But they, they talked about this, how psychologically it's very hard for us to do that, because it's kind of like that dopamine. We want to feel that reward. We want to get that hit of dopamine. So if we take a trade and we are green on it, we get excited. We feel good. When we take a trade and it didn't work out, we feel bad. And as long as you're trading and you feel those emotions, it's going to screw with your trading. It's going to screw with how you're looking at the market, because you're letting those losses and even those gains affect you. You should not. You want to kind of get to that point where they don't affect you, where it's just like, okay, cool. I've made I'm down on these 5 positions. Okay, no big deal. Let me keep going, because you know that when you do get your hits, when you do get your winners, they clear it up. So you're just not you don't even care anymore. It's just not a thing. If you buy the stock and it hits a stop, so be it. Move on to the next one. It's not a big deal. Keep trading. It's a numbers game. So anyways, to get to that point, you really kind of got to work on your psychology. And, Sparrow was saying this, shout out to Sparrow's in the room. Sparrow was saying this before, that it's hard for people to take ownership of their losses. And it really is, guys. It really is. It's not like, I'm not trying to be on my high horse, like, I don't care. When I first started trading, it was hard. I would get very, very discouraged. And I was, when I was first starting to trade, with the bank, it was hard, because I was down, and 1 month it'd be great, the next month it'd be down, and it was like an emotional roller coaster, and it really screwed with my thinking, and it was very hard, very discouraging. 1 minute you're depressed, and then the second minute you're happy, and you're, so it's almost like, for those of you who've ever dated somebody who screws with your with your mental health, it's kind of like that. I know you guys know what I'm talking about, when you've dated somebody and it's like, man, this person's so awesome, and then the next day they do just something horrible, and you get into this routine where this person is like actually starting to affect your mental health. You feel really awesome with them. They bring out a lot of euphoria in you, but at the same time, a lot of your depression comes from that same person. So it's mentally it's hard to deal with, and that is the market. Okay, the market doesn't want to do that. The problem is that we let the market do that to us when we start refusing to accept what the market is telling us. And that's what, again, that's why I go back to why I don't like dollar cost averaging, because I would see these brokers do this to these clients. And I don't come from money, guys. I don't. I come from very humble. My father worked his way from being a mechanic to an engineer with no college degree. We, humble beginnings. And even, his background was even kind of worse than that. He like just in poverty to, becoming self-made. So, seeing this and kind of being a part of this, when I would see people do this, when I would see these brokers calling up their clients and dollar cost, it's like, oh, damn, I need to make some money here. I need to bring in money. The firm needs me to bring in money. I need to call up these clients. And when they would do that, I had a problem with this morally. I did, it's like, why are you getting people in? These positions are down, and the thought never occurred to them that, maybe we should have stops. Maybe we should know that if we get past this point, let's pull the plug. Okay. Let's stop the pain. But instead, it's like the pain isn't enough. We're down 20%. Let's add to that pain. Let's throw some more on there. And it just, it was hard for, I never, that's why I didn't, I wanted to get into trading just because it felt like I had a problem with this, but it heads with a lot of the higher ups. But anyways, that's a thing that the market will do when we're down. We refuse to let the market humble us. The market is telling us, look, you made a trade and you're down. All right, you're down. What do you want to do? And it's up to us to say, okay, you know what? I'm going to accept it, market. Okay, I got it. And now you're telling me it's a lower price. Okay, I'll get out. Okay, on the market. Okay, great, cool. No problem. You go on to the next trade. But if the market says, look, you made a trade that I was going to go up. Well, I'm not going up. I'm going down. What do you want to do? And you say, you know what? I think that I know more than you do. I think I know more than the market. I'm not going to accept what you are telling me because I know better than the market. And when you do that, you get destroyed. So the market goes lower. And instead of people saying, maybe I should get out of this position, they refuse and they put more into it. And so, at the end of the day, like I said, you're just building up. You could get into this habit quickly where you're building up your losers. And what do I mean by that? Well, let me show you something here. Like, let's say Zoom. Okay. There was people who bought this right here. And every time it went lower, there was people who dollar cost averaged. They dollar cost averaged the whole damn time. So if you bought this stock, let's say you bought it at $350 and now it's down to $300. You had people thinking, you know what? I know more than the price. I know more than the market. So I'm going to buy more at $300. And what happens? That $300 turns to $250. And what do they do then? Now, instead of being down, if they're already down 20%, but now instead of being down, they doubled up on their losing position. And now they're down 25%. Now they're down 40%. That has, exponentially increased. And so what do they say? Well, you know what? I was in at $350. I'm going to buy more at $250 since it's down 30%. So you add exponentially to your losing position and you get in on the wrong side and it moves even lower. Now that $200, that $250 comes down to $165. You're down 36% on just that one trade, not to mention all the other times you were buying it all the way down. So here's why I don't like it. Because when you do dollar cost average and you get this type of activity happen, you basically blow up your account. You wipe out everything that you've won. And it's a matter of time before this is going to happen. Why can't this happen? Because what you're doing with, and see, this is the exact opposite of what I do. I want to short up here. And as it goes lower, I want to continue to short. And that's what I was saying. You can make a trade. This one trade right here, if you traded this for the year, this could make your whole entire year because you didn't argue with the market. The market kept telling you every single day, every single week, I'm going down. What do you want to do? Do you want to go down with me or do you want to go against me? And instead of saying, I want to go with the market, like again, a sailboat, let the wind blow you. Instead of doing that, you continue to fight the market all the way down. And that's the worst thing that you could do. I don't want to fight the market. Now, again, I know Harry was first time chattering here, and he mentioned he's a counter trend trader. I'm not trying to dog the counter trend trade. You can do that. But I'm talking in general on trades here, trends. Go with, I want to go with the market. If the market is telling me it's moving in one direction, I don't want to fight it. Okay, and it's the same. It's just like, again, I compare this to like a human being, a dance. You know, you take somebody out on a date, you're dancing with your wife, with your spouse, whatever. You want to flow with them. That's what makes, you know, beautiful performances. You know what I mean? Is that everybody is in sync. You don't have one person, you know, doing this and another person going the opposite direction. That's chaos. So you kind of want to get into that mindset where it's like what the market is doing, that's what you do. Don't fight it. Work with it. Flow with it. And, you know, the sooner you do that, things like this end up going into your favor. But when this stock is going down and people are continuing to put money into Zoom, and a lot of people did, guys. A lot of people did, because they're like, you know what, Zoom is great. This is, everybody's using it. Businesses are using it. This stock is not going to go away. And they wrote it all the way down. That's just one. What about PayPal? Same thing. Oh, PayPal is great. eBay uses this. This is something that, you know, it's a financial service. This is a great company. They've been around for a while. The market is telling you, I want lower prices. The stock is showing you I'm going lower, but instead we have our egos, or, you know, we feel like, you know what, I know the market's going lower, but I know better than the market, so I'm going to buy some more right here, and it just continues to go down. So, you know, there's a mess of these stocks. You know, Roku's another one. We have Roku and the Amazon. I like the Amazon stick, but we have a Roku. Same thing, Roku. So you just, you know, I'm not trying to, I'm just trying to enlighten you guys. So that's why I took off all the moving averages, because really, you know, I use moving averages, but at the end of the day, this is, you know, I just want to know where are you going? Are you going up or down? That's really what I want to know. So again, with the spiders, sorry guys, I keep hitting the mic. With the spiders, look at the market. Look at what the market is telling us. Okay, it's not doing this over here. It's doing this. What side of the mountain are we on? Okay, that's what we want to look at. It looks like this is the apex of the mountain. So the market is going down. The market is in the downtrend. Until it goes into an uptrend, we're fighting a downtrend. So, you know, we're fighting, we're fighting him. Anyways, long rant. Spare says, I see you bet my ex. I'm telling you, the market can have a big time effect on our mental health if we continue to fight the market. We don't want to do that. And I know from experience, because I fought the market for many years until I realized, what if I don't fight the market? What if instead of buying a stock that's going low, I short it? Okay. And what if instead of shorting a stock that's moving up, I buy it? What will happen if I do that? And, you know, and it changes your trading in a moment. Then you know, you have your money management and all that, but generally, you know, let's try to go with the markets. So again, I'm bearish on the spiders. Okay. Yeah, you may get a little rally here, but in general, this is telling me that the winds are blowing south. So until it gets moving up, why get excited? Okay, why change? Because of one candlestick, you know, because of one or 2 days. It's yeah, I don't, you know. Anyways, oh, P-Stash says, sorry, P-Stash, I didn't mean to, oh, there's a couple other things. Okay, because we're being more aggressive could often result in a lower win probability. Chicka Bow Wow says, I use a trailing stop loss, so I don't have to keep readjusting. Perfect. That's perfect. You can do that. You can do that. I readjust because I want to see, you know, what happened at certain levels, rather than just, you know, have it kind of move with it. But you can do it that way. I mean, you know, it's kind of like whatever way works for you. But I try to see at what levels is the stock failing, and then when it breaks those lows, I move my stop to the next lower high. That's how I do it, rather than just have it kind of flow with it. But again, you can do it that way. Peace Dash says, I'm on a shorter time frame and usually win 30 to 45% of the time. That's great. That's awesome. But I'm always around a 2-to-1 risk reward. There you go. There you go. You know, 2-to-1 risk reward, 30, 35, 40%, you know, more aggressive style in my entries. And I'm just working now to have less quality losing trades. Right. And that's where you want to be. You know, this is where you're starting to work your game, because you already know, okay, you know, what is my risk to reward? Like, and I say this all the time, guys, before I get into a trade, I know what I'm going to, if it goes south, I know what I'm going to lose. I know where my stop is. And so I know, cause I don't know how high it's going to go, but I do know, you know, that if it does go south, where am I going to get out? So I'm looking at that. And you know, that's a good thing to be in, because then you can say, well, let me see here. If I get into this trade, I'm risking 16% if it goes against me. Do I want to take this trade? Now, if you have 5 potential trades, one of them, the highest is 16%, but then your lowest risk is like 2%, you have, you know, which one do you want to get into? So it's kind of like, well, I'd rather risk 2%. I'd rather risk 2% than 16%. Okay. Because the name of the game is not to lose money. And when you do lose money, lose the least amount as possible, because we can't control the winners. So if our little 2% risk can turn into a 6% gain, that's a damn good risk to reward. But if our 16% risk, you know, just a 2-to-1 ratio on that 16% that we're risking has to yield a 30% for us. That's a big movement. But our 2% only has to move 4% before we're 2-to-1. So that's, you know, that's what I'm always calculating. That's how I always trade. Okay, if I'm taking this trade, you know, what is the risk here? And anything past 5%, I'm kind of like, I don't know if I want to do it. It's a little too much for me. And Sparrow says, I do like the candle that formed on the SPY weekly, but I'm not calling it bullish until it takes back 4, 6. Let's pull it up. Let's look at that. Sparrow has a very good, guys, if you're not following Sparrow, she's a very talented trader, and I recommend you guys, and she's going to be up tonight at 6 o'clock, right, Sparrow? Go ahead and put it in the chat. So for those of you who don't know Sparrow, and if you don't know Sparrow, man, I don't know where you guys have been. You guys are under rock, or you just kind of tuned in, but you tuned in right on time, because she has an amazing channel, and she does magic. Okay, so follow her. But let's see what the weekly is looking like on the spiders. So you canceled tonight's stream. Oh, okay. Oh, I'm sorry to hear that, Spirit. I was excited for that. I always Fridays are always like, you know, I'm always looking forward to your room on Friday. So that's a shame, but hey, you know, stuff comes up, so I'm not mad at you. I hope you have a good weekend and a good Friday off, you know, since I know Fridays are usually streaming, but next Friday. And I think you're streaming on Sunday, right? That's your next stream. So and Peace Dash says, I trade futures. Okay, you're a futures trader, so I don't know. Yeah, futures it's a little bit different, guys. Futures is you know, different. I'm speaking about the equities, you know, shares and whatnot. Yeah, for sure. I'm still in the Heiken Ashi. I got you, man. Don't worry. I see it. Okay, so here we are. Yeah, that little hammer. This is a nice hammer. Okay, nice little tail, little head. Thor's hammer. Thor's hammer. I like that. These hammers are very big. I don't look at the candlesticks so much. They've been kind of they've been kind of distracting me actually, because instead of looking at the trend, I start looking at the candles, which isn't a bad thing, but I kind of feel like that's why I kind of switched it over. But yeah, this is a strong candle right here. So we can see some of a bounce on this. This is a really strong candle for sure. What are you watching, Sparrow? You got anything in specific that you're gonna be watching tonight? You're gonna take a bath, watch some movies, and take a nice mental health night. Yeah, that's good. Good for you. Good for you. I had to do that, for like, you remember when I took my time off, because sometimes you just got to do that. This could be mentally draining sometimes. So, okay, so this is what you're talking about. Let me put the, let's put our moving averages back on this guy here, okay? So there's my 20. And there goes the 50. And there goes the 200 day. All right. I took off the 100 day. I just, sometimes too many lines. I don't know. I'm getting to the point now where it's like I want to simplify my trading as much as I can. So sometimes I'm like, do I really use this moving average all the time? Not really. I rarely use a 100-day moving average. Rarely. I mean, it's nice to have it there, but I'm really looking at the 20 and the 50. I don't even use the 200-day that much. I don't trade. I'm not holding things that long, but they're helpful. But anyways, I'm just saying, guys, I've been on this kind of routine of like things that I'm not really using. I'm kind of just clearing them out so that I can see quickly what whether I like it or not. So yeah, you got this hammer right under the 50-day moving average. Okay, I think it's gonna have some problems getting up in here. Now you remember too, we had a lot of the plunger team buying yesterday and today, and they're trying to rescue the market. So a lot of this candle is their doing. You also had a lot of computers and algorithms that were trying to create volume, and they did. You got a little bit of a volume there. I would say the next Monday is going to be a good sign to see what happens. Okay. It would not surprise me. As a matter of fact, I said this on my last stream. What I want to see with the spiders, I want to see the spiders rally. I really want to see a rally here. And this is the weekly. Let me go back to my daily so we can see it a little bit better. Okay. I want to see the spiders rally and fail right around that 50-day moving average. If they can like just rally and like just really get everything kind of going to the upside and fail at the 50-day moving average and come down, that's what I'm looking for. That's what I want to see happen. Okay, so I do want to rally. I would like for Monday and Tuesday, and I would like for it to go up because I want to see it. I want to see it. We've already had what? This was our first one here. Let me mark this again. Okay, this was our first failure. Okay, this was the first lower high. Then we had this lower high right here, and again it was pretty much a failure twice right here. All right, and then here's our first one. So what I want to see is I want to see a rally come up, and I want to see a failure. Oh, come on. I want to see a failure somewhere right around here. Okay, I don't know where, but I want to see it to rally and maybe fail here at the 200-day. But again, I think the 50 would be good. If it does it on the 200, that'd be good either way. But the thing is, I want to see the failure. I want to see it rally and fail to make a lower high, and then, a higher high somewhere like maybe around here. So that as it rallies up here, then it continues on lower, and then we get our steps. We get the staircase and the trend: lower high, lower low, lower high, lower low, and once the market gets in that groove, that's where you make your money, because you just short. I mean, if you're shorting, or you can buy like inverse. If you can't short, because I know some of you guys are not comfortable with the idea of shorting, or you can't short because you don't have an account that is giving you access to do that. So, you know, you can buy things like the inverse spiders and things like that. You can do that. And inverse, you know, inverse funds, you could do that. But the thing is this, is that once you get in that trend, whether it's an uptrend or a downtrend, that's where you make your money. You make your money in that, you know, in that trend as it kind of rallies up to the upside. You're just, you know, you're just shorting. And that's what I did today. And again, today I shorted Apple and had a couple of different stocks here that I did. Dr. Pepper. I haven't had a Dr. Pepper in years, guys. It's been a long. I saw Dr. Pepper. I was like, man, I don't remember the last time I even had Dr. Pepper. I just drink water, guys. I don't really drink pop and things like that. Sugary drinks, a lot of sugar. I used to drink Sprite like a fish. I'm telling you, I was like, you know, 6-pack of Sprite. Like, I don't know, maybe I have no idea, but me and my mom, man, we used to go through Sprites like crazy. And it wasn't until my wife did something, right? She looked at the because again, she went to patisserie school. She doesn't do that, but she went to patisserie school. So she comes back and she actually takes sugar, fills it up into the, you know, into actual like cups and whatnot. And she says, why don't you drink this? I said, what are you talking? What is this? Some kind of like a dare? You dare me to? She said, no, why don't you just put some water and drink it? Why would I do that? Why, you're doing it anyways? What do you mean? This is how much Sprite you're drinking every damn day. This much sugar is in the Sprite that you're drinking. You're drinking this much sugar every day. You're you know, you're heading towards diabetes if you keep this. And I had to see it like, wow, that's a lot of damn sugar, you know? So I stopped. It was kind of scary. Like, whoa, that is, you know, you don't know how much sugar you're drinking till you kind of like just tally it up like that and look at it. Like, what's your daily intake? So that was pretty much where I stopped. I said, you know, maybe I should drink some water because this is a lot of damn sugar. And I already have a sweet tooth, guys. So it was basically, well, like, do I give up the Sprites or do I give up the cannolis and the tiramisu? And, you know, I love sweets. So I'm like, well, I'll give up the Sprite because I'd rather have some cake or a cupcake or something. And you know, moderation, of course. Anyways, I don't know how I got off on that. But just, again, I saw Dr. Pepper today. I'm like, just reminding me on how, you know, I've had a Dr. Pepper in years. I don't know anyone who even is a big fan of Dr. Pepper. Everybody's usually Pepsi or Sprite. Mountain Dew is a big one, but Monster energy drink, that was a huge one. Which Monster, I was actually looking at that the other day. Monster beverage. Look at, yeah, same thing here. You got a little pop, but look at this, guys. Look at the trend on Monster. Okay, and again, I like switching to the Heikin because it just kind of very quickly, very easily, it kind of just gets out all the noise and I can see my trend real clear. Okay, so you can tell, okay, this is basically just you know, some kind of a short covering rally or whatever, but you can see, you know, the stock is selling off. So if you're buying the stock, you know that you're kind of running against, you know, running against the trend very easily. And then from there you can of course switch into your candlesticks and start looking and getting into the nitty gritty, which actually, so you see that hammer that Sparrow pointed out that we had on spiders for the week. If you see here, you can see it right there. There is Thor's hammer and what happened today. You know, so these candles do, you know, they are good to look at, especially this one right here. This one right here is like, you know, one of the most popular, one of the strongest signals, the hammer. And that usually happens because you get that tail and then boom. So, but let's ask ourselves this question. Does that mean that we should now start buying Monster energy drink? Again, if you look at it, downtrend, if we buy this stock, we have to admit that we're buying a stock that's in a downtrend. And there's nothing wrong with that. Okay. It's some of us are counter trend traders. There's nothing wrong with that. But we should know. For those of you who trade stocks and you don't know when you're doing this, that's when it's a problem. Because you know, it's like you're buying a stock, but you're unaware of the risk. Now, those of you who buy it and you're like, yeah, you know what, I'm buying it. Here are my reasons for it. I'm a counter trend trader. I know that this is in a downtrend. It's different. You can see it. You know, you're not going to be blindsided by it. You already know that you have kind of like a snake in the grass, a potential snake in the grass. So you want to, for me, I want to be aware of these trends and trade with the trends. So for me, I would be looking right now, one or two things that I'm looking at with Monster. All right. So Monster, either this is for real. Okay. This is a real movement. That's some good volume. And slowly we're going to break out of this downtrend, and it's going to break above that 20-day moving average and start making a series of higher highs and lower lows. And I'm going to start forming an uptrend. This may be the starting point of that. Possibly. I don't know yet. But that's one of the things that I would try to, basically be thinking about, be prepared for. Okay. Is this a buying opportunity in Monster? Should I be going long in this? Now, I wouldn't, but I would be looking at it right now. Now, if Monster, see, I would put this on my watch list, and I'll just go ahead and put it there, right? I would be looking at Monster for the next few days, next week, okay? And I'm going to be looking at it. If Monster gets above, and I'm going to go through and just kind of erase these for now so that we could all kind of see things again very simply, very easily. If Monster gets above our 20-day moving average, that's 1 point for the bulls that I would say, okay, because there's some criteria that I look at. Once it gets above the 20-day moving average and it's riding above that cable, that line, for me that's a bullish reason to buy the stock. So I would be looking at that. Now, if it starts making higher highs and lower lows, a trend is forming. So that's when I would start looking at possibly going long, but it's not going to happen in one day. So for those of you who get really excited and start buying, that's good. But, be patient, because there's a lot of people who went out today. Well, not a lot, but there's people who went out today and they bought Monster right here. Okay. And it may fail. It may come in on Monday and then it just comes right back down, and then it breaks the low and it gets straight back into its downtrend, lower highs and lower lows. But people went out and bought it because of the volume, because of the news, and they think, you know what, I've nailed the bottom. That's one of the most dangerous things that you could do if you're trying to catch those bottoms and you don't have a stop, because if it's a fake out, then you're gonna quickly get, the stock's gonna drag you down. So you got to be careful. For me, this is not the time to buy. This is the time to look at it like, okay, wow, that's pretty good. Let's see if, the following days confirm that this is indeed a real movement. If, again, on Monday, you see Monster break up and now it's above the 20-day moving average and it's holding, that's pretty damn good. Okay, maybe then if I was thinking about buying it and I'm trying to catch the bottom, maybe then I would buy it and then see, okay, I'll put my stop right at the bottom of when it pierced the 20-day. So what's my risk there? 3%, 4%. Okay, cool. So if it goes down, maybe. But I'm trying to just get you guys to just be aware of this, okay? Because I really am surprised that a lot of people will trade against a trend, and it's hard to make money that way. Again, I'm not taking any shots to the counter trend traders. There are very good traders, but if you're new, if you are getting into this market new and you're not aware of this, this is why you're losing money. You're buying stocks that are just moving lower and you can't see it. You can't see that they're moving against you. So let me catch up with the chat. Now, Sparrow says it feels like a bull trap to me. You know what, Sparrow, I think we're going to get a little rally. I think we're going to get somewhat of a rally. And like I said, I really do want to see the spiders rally. I want to see them create that next lower high and then move lower. Because look, there's that 20-day moving average. So if they stay under and then it breaks us low, that's going to be all the information that we need to know that, wow, there's no buyers here. Okay, because 1 or 2 days does not reverse the market. It's a trend takes a good few weeks, maybe a week to kind of kick in a trend and then gain strength. It's like a moving train. Okay, as it gains speed, once it gets into that trend, and again, that's where you make a lot of money. You make a lot of money in that trend. That's why, again, everybody was making money in the market like, you know, a year or two ago, because everything was going up. You know, everybody was buying the dip and they were all making money. They weren't aware of it, but they were trading with the trend. And now that the trend is gone, you have a lot of people like, oh my gosh, I don't know how much, you know, this is a really hard market to trade. Of course, it's a hard market to trade. You're out of the trend. Once the market breaks out of that trend, it is damn hard to trade. You either should not trade if you're new and inexperienced. You should be learning, but you shouldn't be trading because it's not in the trend anymore. The easy money is gone. Now it's like whipsawing all over the place. So you got to be careful once it breaks trend. And then once it's in a downtrend, which I think the spiders is gonna start getting into. It's already forming that downtrend. And look, let's just, oh sorry, the wrong one here. Let's put this here to kind of visualize it. Okay, so this is what I see, guys. Okay, and you know what, let's even move this and like, okay. This is what I see the spider. It's in the downtrend. Okay, so as long as it continues in there, you're gonna make, if it stays and it's you know, again, if it rallies up here and it fails and it gives us our lower high, that's, you know, that's just gonna build the strength of the trend. And so if you're short, this is where you make money. You make money in the trend. At least that's where I make money. I make money in the trends, you know. And I don't trade the index. I'm trading individual stocks, but I'm trading my stocks in the direction of the market, because they're all doing this. You know, like if we look at Comcast and all these, they're all kind of doing that. Dr. Pepper is actually one here that this is, if you see here, there's a nice trend here, but I think Dr. Pepper is starting to fail. Okay, I think. And let me look at this actually. Let me see what I see. Actually, I think, you know what? On Monday, I'm going to get out of this. This was a trade that I took without really looking, you know, I'm shorting it, but look, you know, it's yes, it's starting to break down, but it's not in the downtrend, right? I just did this whole rant, you know, make money in the downtrend, and look at me, I'm going short, and this is not even in the downtrend. So look, you know what, guys, you're always going to make mistakes. It's a process. I'm trading like, you know, anywhere from 9 to 18 positions, you know, in my book. And that's the other thing. Some people say, oh, I don't have that much cash. Listen, you know, if you have $10, $20, $50,000, you can trade. If you I don't want to say you can do it, because you need to start first with 1 or 2. But once you develop a system, it's for me, it's easier to trade a number of stocks than 1 or 2 or 3 stocks, because you have, the odds are in your favor. It's kind of like buying, this is a really bad analogy, but I'm going to make it anyways. It's kind of like buying 10 lottery tickets. You have 10 chances of winning. Your odds are higher versus just buying 1. So for me, I like to allocate my capital, and the percentages are all that matters, guys. That's really it. Okay, that's really it. It's not about, it's the percentages. So if you allocate your portfolio and say, you know what, I'm going to start off with 5 stocks. Well, that's 5. That's 5 chances that you have of finding a winner. Now, for those of you who are just going, you know, head first into one position, that's kind of risky, because if that thing goes against you, it's going to take out your whole account. If you have 5 trades and they're allocated, you know, with a little bit of capital, and one of them goes down or 2 of them go down, it's not taking down your whole portfolio, because you're not, you know, putting all that capital behind those 1 or 2 positions. You spread out the capital. That's why for me, it's safer to have, you know, 9 to 18 positions than just having 2 or 3, you know, and putting all, you know, your capital really concentrated into those 3. For me, that's a little bit more risky. Actually, I would say that's a lot more risky. So anyways, let's see here. Let me go on. Sheeny, not yeah, I don't want to ignore you. So Sheeny has requested a chart. So guys, if you want to, if there's a stock that you're looking at, whatever it is, you know, let's pull it up on the charts. Let's all look at it, okay? And I'm not here to say, oh, you know, what the heck's the matter with you? Why are you doing? I'm not here to dog or you know, belittle any of you guys. We all learn from these charts. So what I'm doing is telling you what I see and how I would play it. And if it's different from what you're doing, if I'm like, yeah, I would short this thing right here, this is a great time for me to short, and that's where you went long, don't take it as an insult, because I'm just trying to show you what I'm seeing with my eyes, and that's going to help you as a trader to see the stock in different at different angles. You may see something that you didn't see, and that one thing that you didn't see could save you some money. So, you know, again, don't take anything personal. I'm not trying to insult anyone when I say, oh, you know, this looks like a great short, and you're not short. Because, again, I know a lot of you don't short or not comfortable with the idea. And I get it. Wall Street does not want people to know how to short because they don't make money when you short. Okay, so that's why most people don't short. And whenever they do talk about shorting, they scare you. They say, wow, you could lose, you know, the amount that you could lose is infinite. Well, let's be serious, guys. You know, if we're trading with no stops, well, that's not a wise move to do anyways. We should not be trading long or short without a stop. We should know when we get into a position, where's our pain threshold? You know, are we going to let this thing kind of, you know, continue to bleed our accounts till we're down to zero? I mean, I don't know anyone who would do that. You know, maybe some really risky traders, but we're not going to do that. Realistically, we're going to, hopefully, when you take that trade, you're going to say, you know what, look, I'm going to, like I said, I'm going to risk 5%, risk 10% here. So when people short, you have to have the same mindset. Now, that being said, that does not mean you can short whatever. There are some things that you should absolutely not short, and Sparrow could tell you all about those. You know, you can low floats, things like that. Pennies, because you could short a stock at 50 cents and the next day it goes to $2. You're hit. That's bad. All right, you're gonna feel that for the whole year. So there are things that I do not short. When I say I'm short and when I say you should learn how to short, I'm talking about learning how to short all these big, you know, megacorp stocks. You know, learn how to short Bank of America, learn how to short Starbucks, you know, these things, because these are, you know, these are kind of like slow movers, I guess you could say. So they're safer to short. You can set a stop, and if the stock goes against, it gets hit, but it's not like from one day to the next, Starbucks is going to double in price. Okay. You don't have that kind of movement in these stocks. That's why I like to trade them, because there's less risk, you know. And this is how I trade. I trade always looking at less risk, not going with the, you know, big explosive moves, because again, those stocks I would not short, because you can get caught on the wrong side. You can short a penny or whatever, and it'll turn into $1, and you're done. So when I say learn how to short, I'm not talking learn how to short those stocks. If you're trying to do something like that, I discourage it. I don't think you should. I would, you know, I'm sure Sparrow would say the same thing, and a lot of you guys who are in the room, you know, there's a lot of risk there. But if you want to learn how to short, you should start, you know, by learning how to short maybe some of the ETFs, okay? Because I tell you guys, Wall Street does not want you to know how to short. Again, they make no money. They don't want you to know how to do that technique. This is kind of shielded from the public, and when you do it, it's discouraged. They try to fear monger you. Okay, they try to fear monger you. But if you flip the stock upside down, you're basically doing the same thing. Okay, except instead of buying, you're calling it short. That's it. But the patterns are still there, and so you give yourself a tool, a new tool. And that is, you can make money when the stock is going down. Right now, guys, if I was not shorting, I would not be making any money. Maybe a little bit on some of my longs, I think. I mean, looking at I have no longs. Okay, nothing in my position is long. I was looking at T-Mobile the other day. Sparrow, I know I talked to you about that, what you saw with T-Mobile. But I'm not long on anything. So like right now in this market, you can't make money going long. There's nothing to buy. Everything is everything's going down. So you know, you can't make money when the market goes down. So you are kind of like, you know, you're only able to participate in one direction of the market, which is, you know, I think you know, you should learn how to take advantage and make money when the stocks go down. Because again, guys, they don't just go up. Stocks go up and they go down, and they repeat these patterns. And again, if you're shorting without a stop, well, of course you can, you know, get a margin call and lose it all. If it continues to go against you and you just refuse to get out, you can do that. But if you're trying to learn how to trade, I don't think you would do that. I think, you know, the first thing you should learn is, where is my stop? You know, where's my stop on this? But again, guys, right now, all the money that's to be made is, you know, shorts. I had a really good week, but I would not have had a good week if I was not able to short. Again, one of my mentors would say, it's like buying a car that only goes forward. It doesn't go reverse. Who would buy that kind of car? You see what I'm saying? So I'm a big believer in learning how to short, but only learning how to short, you know, big, you know, mega corps. I mean, I guess you could, you know, short some of the maybe smaller mid. They get riskier, but I would say, you know, the Intels and the Microsoft, Apples, things like that, you know. But learn how to do it first, guys. Don't just go and, oh, the market's, I'm going to short everything. Don't do that. I'm not trying to say that. I'm just trying to say, you know, learn about it, read about how to short stocks. Listen to some of the interviews with some of the great traders and the traders who are, you know, who have a good track record. They're all over YouTube. You know, listen to them. You know, listen. There's so much stuff out there now. It's amazing. You know, check out Ray Dalio. These things, and just, you know, educate yourself. Because I tell you what, all of Wall Street, they all know how to short, but they don't want Main Street to short. They don't want you to know how to do that. So enough of my rant. Thank you, Sparrow. I'm just kind of, you know, just kind of yapping away. let's get into the charts, guys. I've been, you know, kind of talking your ear off. Let's go into our charts. Let's pull up some stocks. Let's see what we got. So Sheeny is requesting BP. So let's pull that up. Let's see what we got. We have a couple of stocks that are being requested. So what's up with this? Okay, there we go. BP is now being, and again, if you want to you know, share a chart, or you just want to get input, or you think we all should look at it, hit exclamation chart and then following your symbol, and then it'll come up on the list. So let's look at BP. And again, should I leave my moving averages off? Yeah, I'm going to leave it like this, very simple, so that we all can see it right away. I'm going to show you guys how I trade, okay? So BP, what do we got here, guys? Okay, downtrend that's forming. So with BP, hold on one second. Okay, so with BP we have we had a nice little run. Okay, this is some good movement, but we're seeing a breakdown in the trend. We saw a breakdown here a little bit, and now we're seeing a breakdown right here. So if we plug in our moving averages, let's see what information that gives us. Let's start with the most important one that I look at first. Well, the most important to me is a 50, but the 20 is good for short-term traders. So guys, let me know if the CNBC is too loud. It sounds fine to me. I can hear Jim Cramer a little bit in the background, but let me know if like it's hard to hear what I'm talking about, so I can lower him down. But okay, so look at this. This is beautiful. Okay, got above that 20-day, and it rode the 20-day for it was about 21 days, 14 trading days. Got back above it, and really it didn't get behind it until Tuesday of this week. So it's been riding above that 20-day moving average for the last month and a half. You're looking at 34 trading days, okay, that it's been up. But this week it broke under that 20-day moving average. Now, whenever that happens, that is a bearish sign, okay? So we got that going on, and if we look at you just look at the patterns, you got a downtrend that's now forming, okay? So basically what we can do now is mark our high. Here is our high. There is our high right there, okay? So until it breaks above that, let's just say this stock is stalling, okay? BP is not going anywhere because it tried to get up there and it failed, and now it went under the 20-day. So where's our low? The last low is about right here, okay? So we are kind of, here's our channel that we got right here, okay? Got a little bit of a bounce off of that level, that 28.89, okay? But generally, what do we have going on? Well, if we draw our trend, okay, we have a downtrend that is now starting to form in this stock. Okay, there we go. It's a very tight one, okay? It could eventually, kind of widen, but right now we got a pretty tight downtrend that's starting to happen. So if you just mark your chart just like this, you already know if you want to go long, you already know when. Should you go long now? Well, no, you could go long now and be stuck in that downtrend. You want to wait till it breaks above right here, this trend line. If it breaks above that and holds it, that's a good sign that it's kind of, it got out of that downtrend. Okay, so it's not there yet. So this is bullish. I mean, this is bearish. Okay, under the 20, downtrend, failed at this high. So now what I would be looking at here is let me switch over, okay, because I'm just looking at the Heikin Ashi, and I want to start there again, guys, because I think that helps us to see the trend, and are we going with the trend, because your chances for a successful trade are much higher when the trend is in your favor. You could actually make a mistake and make money. And again, I refer to all the people who have been making money for the last, like a year, 2 years ago. They were buying everything when somebody said buy the dip, and they would make money, right? They didn't even know why. Well, they were in an uptrend. Okay, so let's be aware of that. Let's be aware of that. So switching to the candles, you see it's the same exact thing. Okay, so bearish. Okay, somebody says, what should I be doing here? Well, if you're buying the stock, if you're going long, you're fighting against the market. The market is telling you that it wants lower prices. Now it's up to you if you want to argue with the market and say, I know better than you. You're going to give me higher prices. Well, the market is not. The market is going to give you what it's giving you, and the market right now is giving us lower prices on BP. So does that mean, okay, now here's the other thing. I can't hear Kramer at all. Oh, which is how I prefer him. Okay, all right, so maybe I just hear him in my headphones. Here's the thing, guys. We all have different time frames of trading. Okay, so some of you may be buying this because you just want to get a little bit of a movement on it. Okay, you want to get a little movement to the upside and then get out. You might be a day trader. If you're doing that, you are a day trader. I'm not a day trader. I'm a position trader. Swing trader, position trader. I want to say more position trader though, because I think swing trading is usually you get in and then you get out in a few weeks. I like to build my positions and kind of, pyramid, scale, do all that stuff. I like to slowly start with a small amount and then gradually kind of add to it if it indeed proves to work in my favor. So I don't just kind of go in, 100% boom, I'm in. I don't do that. A lot of swing traders do. Okay, so let's just call it position trading. That's what I do here. So I'm looking at it from my eyes as a position trader. Okay, if you're a day trader, this means probably nothing to you. Okay, but we'll still talk about it because we all want to make money. So this thing here, okay, downtrend, I would be looking to short, and again, I'm going to clear this out. Okay. This right here, this is where the thing that we need to be aware of is if we switch to the weekly, and I don't want to do that to confuse you guys, but if we switch to a weekly, you can see that we're still in an uptrend on the weekly. Okay, it's not in a downtrend yet. And look at that Thor's hammer. Okay, this is almost just like the spiders. Okay, we need to be aware of the weekly wins, as I like to call it, to see what the weekly is doing. So the weekly is still pretty strong. Okay, it's above the 20-day, so the week is strong. I wouldn't want to short this thing with a strong weekly chart looking like this. I want my daily and my weekly to agree with each other. Then I know that the odds are better for the trade. So I wouldn't be shorting this thing. I think this is a good example of counter trend trading. And as I said before, when Harry mentioned earlier that he's a counter trend trader, I also am a counter trend trader. I don't trade counter trend a lot, but there are times when I will. This is one of those times. Okay, this is a time where maybe I would say, I should buy it here because on the week this is a nice uptrend on the week and it's bouncing off of the 20. So maybe I can go in here and catch it at the low. Okay, but I'm aware of what the week is doing. The weekly is in my favor, whereas the daily is not. So I would be trading against the trend, the daily trend on this one, because I'm trying to trade in accordance with the weekly. But I don't want to confuse anyone. So let me just say here, this one, I wouldn't trade it, okay? Because I want the weekly and I want the daily to both be in my favor. They're not on this one. So for me, I would say, all right, next. What's the next? What else do we got? Okay. Because I want to try to find the ones that have the more odds in my favor. So all I can say on BP is I'm bearish on BP, and I would be bullish. I would give it a few days. If it can get back into the 20-day moving average and right above it, that would be pretty good. Then I would consider going long. But right now, I wouldn't buy it. I wouldn't buy it. It's too confusing to read. Okay, you got a downtrend on the weekly or on the daily. You got an uptrend on the weekly. So you could get caught in the middle of this thing. You can get caught between the weekly and the daily. So I just wouldn't do it. I wouldn't trade this one. And if I did trade it, I would try to not be in it for very long until again, the daily and the weekly are kind of confirmed. But yeah, so what do we give this one? Overall, I would say bullish, okay, because the weekly is still strong. And trust me, on the weekly, you might have a little bounces here and there, but if the week is strong, that's a pretty good sign of strength. So this one is bullish when it comes to that. And what you might be having is just a snapback. Now, if we look here, and we're on our day, and we put this right here on the low, it pretty much, the low that we had back on the 24th, it came back down yesterday, and it did not break under it. So this is a good sign. So this, again, would be, for me, this would be a good example of maybe taking a counter trend trade. If you buy this stock, you're really betting on the weekly. Okay, you're trying to get that weekly action, and you're buying it at kind of like the lows right here. So you could do that, even though again the daily is kind of starting to set up as a downtrend. So you're getting caught. Okay, it's kind of like you're getting caught between two wind streams. One of them is blowing you north, the other one is blowing you south. So if you're making that trade, just be aware that you might get caught in between this. It might go sideways. You don't really know. It's best to take the trade when both the weekly and the daily are in your favor. Then it's like, they're both blowing the same direction. So you're good. You just got to align yourself. So, yeah, this one you can kind of take either way. But I wouldn't take it because, like, there's hundreds of other stocks. So I would rather find something else that, is going to give me I have more odds in my favor. But what did you say? You said you currently are very long BP for $40 strike. Probably just scalp premiums as it moves up. Yeah. Well, I don't want to talk you out of your position, Sheeny. I wouldn't be trading it that way. But, again, it doesn't mean you can't make money. Just be aware of the fact that you're getting caught between a weekly uptrend and a daily downtrend. So now, how do downtrends form on the weekly? They form from the daily. Okay. Eventually the daily makes those lower lows and those lower highs, and then the weekly follows. And once the weekly is now in a down, that's when it can get ugly. So just be careful. If you're long on calls, just be careful. You don't know. But and again, I don't really trade the options. So let me tell you how I would like to trade BP. I would like for BP to get back above the 20, break out of this downtrend. Once it could do that, and if it could break out, I don't mean a weak breakout. I don't mean like, oh yeah, now it's now over. I mean, again, a nice big movement to the upside and break above, and now right above the 20, I would go long there. Then I would feel much more comfortable going long, and at that point, because at that point you got the weekly in their favor. You got a stock that broke the downtrend, stock that broke above and now is riding on the 20. And look at this too. We didn't even mention the stochastics. Look at the stochastics down here. It's really, it's already, you got tweezers forming. You got tweezers right here, right at the bottom. Okay. It's the stochastics are under the 20 and they're forming the tweezers. Okay. This is what I mean. You get that little like tweezer kind of formation. That means that it's the stochastics are already, they're getting ready to push you up. They're getting ready to push this stock up. So the MACD, yes, the MACD is low, but look at this wide gap between the lines. I mean, not the gap, but it's, they're not tight. This is a wide separate. So these two, the MACD lines are going to start, coming back closer to each other. And as they do that, it's going to push this up. So as I look at this stock, I got to say I'm more bullish on it than I am bearish. I would just wait for it to get above and confirm an uptrend on the daily. Once that's there, that's where the market, is going. This thing wants higher prices. So, but I'm not not going to rate this one because again, this one's kind of like stuck in the middle right now. So I would wait for it. So I hope that helps as always, Sheeny. And you got another one here. And let me catch up with the chat as well. Let me catch up. You bought your contract yesterday at the bottom of the candle. It was partly counter trend. Okay. Got you. No, buying off the news. Yeah. Be careful with that. Be careful. Always look at the chart. The news, again, man, the news is going to try to stroke those emotions. Okay. Oh, it's war. Oh, it's COVID. Oh, it's, whatever. There's always something. Just look at the chart. Let the market tell you. The market gives you plenty. Okay. If the market is in an uptrend, if the stock's in an uptrend, that's really all we need. Okay. The news is nice. We should be aware of it for sure. But at the end of the day, the most important voice is the chart. So just be careful, because as we get into these times with war, the news gets louder and louder and louder. They want everybody to hear about it. Though, everybody's posting on social. You got people on TikTok, people on Instagram. You turn on the news, it's on the news. You talk to your mom. Your mom is like, oh, what do you think is going to happen? It's everywhere, bro. The noise is loud. When things are very loud like that, again, it's trying to get you, it's trying to move you emotionally so much that you make a trade. And sometimes that could happen. So, usually, it works if, again, the market is confirming all that. Okay. So again, a lot of people buying right now because of you know, the market had a little rally, you know, in the last 2 days. The market is not confirming that. The chart isn't confirming that. So, you know, why get excited? You know, there's nothing to really get too excited about. So let me erase this line. Cool. Awesome. Well, good luck on it, man. Good luck on it. At least, you know, like I said, that's just my take on it. But let's move into the next one. What do we have here? MDLZ. Mondelez? Mondelez, I don't know. All right, so what do we got with this one? Guys, let's do this together. Let's do this together as a team here. Let me see here. 1 second.
So we're a standout when it comes to best assets. We want to be the same as copper.
Okay. All right, so just looking at this, what kind of movement do we have on this? Are we in an uptrend? Are we in a downtrend? Or are we moving sideways?
Yes, in the short term.
Well, we are moving sideways, as you can tell. Okay. So,
But I just point out that we recently
yeah, this is moving sideways. Let's switch over to the weekly. Uptrend, downtrend, sideways. We are in an uptrend. Okay. So while the stock is moving sideways, the weekly is giving us a bullish sign. The daily is giving us a neutral sign. Okay. It's saying I really don't know where I want to go. That again, this is in the middle of a transition. Okay. Whenever you have a break between the daily and the weekly where they're not in agreement, they are basically arguing. It's like a husband and a wife. Okay. The husband wants to have Italian for dinner and the wife wants to have Mexican food. Okay. They're not in agreement. Okay. Eventually, somebody's going to convince the other which one to do. Okay. Let's go with the Italian food. Yeah, all right. I haven't had Italian in a while. Let's go with that. They both get in agreement and they're in sync. There you go. Right now, these stocks don't agree. This stock here does not have an agreement. They're kind of, you know, they're on opposite ends. Okay. They're not in agreement. I say that because whenever I'm trading, I want to make sure that they're both in agreement. Okay. Because, and I'm telling you this because the odds for success are going to be higher for you the minute you have both on the same bias. You see what I'm saying? So once they're both like uptrend, there you go. The odds are for you having a successful long trade are higher when they're both in agreement. The name of the game is that you want to filter through all of these stocks, not all of them, but you want to filter through a selection of quality stocks and find those that are giving you the criteria that's giving you the best odds. So this is kind of another one of those plays with BP where you have disagreement between the daily and the weekly. So I wouldn't take the trade. I wouldn't take it because of that. Okay. Let's still break it down though. Okay. But that's the first thing that I'm looking at. That's enough for me to say, okay, next. Okay. Because there's hundreds of other stocks, but we're not going to do that. We're going to continue to chart it. Okay. So let's throw in our moving averages. Okay. Okay, so breaking the 50 on the daily, that's, you know, I don't like that. That's never a good sign. Okay, so it's breaking the 50. It's not above the 20, resting on the 200-day kind of. So the stochastics are not under 20, but they're turning up. You do see, you know, some movement going in there. And the MACD looks like it's starting to, you know, it may start to cross over. So this is a confused stock, my friend. This is a very confused stock, okay? And again, we look at the weekly. The weekly is up. It's great, you know, above the 20, above the 50. You have the MACD is positive. You have a stochastics that's peaking, but everything looks pretty good on the weekly, okay? Then you got in the day a different story. You got a MACD that's, you know, turning, You got the stock that's breaking under the moving averages. And you know, yeah, this is a stock that you can buy, and you don't know really where it's going to go because the winds are blowing both north and south. So, you know, 50-50 in a way. I would rate this, okay? I would rate this generally bullish. If they said, look, you know what, you have to take a trade. You cannot skip this. You have to take it. Okay. No ifs, ands, or buts. You got to go long or short. What are you going to do? I would look towards going long on this one. Okay. Because again, you got a strong weekly. So that's a good sign for me. Okay. The weekly, this is a good analogy. The weekly is W for a reason. Okay. Let's say the weekly is the wife. All right. And D is daily for the dad. Okay. All right. Because it's not F for father, whatever. But this is the wife. Usually, who has more sway in the marriage? If you're married, is it the wife or the husband? Well, if you've been married for a long time, or if you know couples who've been married for a long time and have a great marriage, they'll tell you the wife has a sway, bro. The man might, you know, maybe make some money, although that's not how it is in these days and age. Now usually it's, you know, usually the wife will make more. But anyways, here's the thing. If the wife is unhappy, you're not going to be happy, bro. If you go on vacation and your wife is unhappy, you know, nothing, it's not going to be good. All right. Now you can switch your attitude. Guys can switch their attitude, but there was a saying, right? The husband is the head, but the wife is the neck. And she points the head where it's going to go. Some kind of a Greek saying, I forget. But I want to say that, okay? Because just as I believe, and this is my opinion, maybe a lot of you guys are like, no, that's not my relationship. Well, you know, I'm just talking generalities and from my experience. My experience has always been that the woman is the one who pretty much sets the tone, okay? If the wife is not happy, nobody's happy. Nobody's happy. You know, it's just how in my house, my mom wasn't happy. Forget about it, bro. It's, you know, party's over. You know, you got to, whereas if my dad isn't happy, you know, he'll shake it off and then, all right, let's get with it. Okay. So the wife has a lot of sway, just as the weekly has a lot of sway. And I say that's a good way to kind of maybe remember it, is that the weekly is kind of going to eventually, it's more than often, it's stronger than the daily. Okay. Now, there are times when the daily will eventually convince the weekly and then they both go. That happens, okay, because a weekly is not going to get in a downtrend until the daily is in a downtrend long enough that finally the weekly is convinced and it follows along, okay? So, but the weekly is where the strength is, okay? So I would say this. I would say that I'm bullish on this one because of this weekly. This is pretty nice. All right, I like that. I'm not crazy about the daily, but which one is stronger, the weekly or the day? The weekly. The weekly is stronger than the day. So for that reason, I would say that I would be bullish, but I wouldn't be thrilled about getting into this position because, again, I'm in between two people. One wants Italian, the other one wants Mexican food, and I'm hungry. Okay, I just want you to make up your damn mind so that I can eat. Okay, so I would skip on this one. But I'm going to rate it bullish because, again, that weekly is kind of convincing me that. But it is getting to that point where if the daily continues to break, if it breaks this 200-day moving average, then the weekly is going to be convinced that, you know what, maybe it's time to head south. So, but until that point, it is holding right now. Yeah, the weekly is holding above. So let's just give it that. Let me go ahead and do this. Let's give this the bullish sign. So again, brother, I hope that helps. And you know, I have my little strange analogies or whatever you call them, but it's all just to kind of get some laughs and giggles, but also understand, you know, and plug it into the market. Happy wife, happy life. There you go. Happy wife, happy. That's perfect. All right. So happy weekly, is going to tell you a lot. Okay, if the weekly is happy and the daily is not, the weekly is going to have more sway. Okay, so but when they're both in agreement, you're good to go. One thing I've learned from you and Sparrow, you always say that the markets retrace numbers, always retrace. Sparrow's a godsend on support and resistance, so I've been trying to play the two, middle of the range between each, and play to the position of tension. Yeah, I would never want to speak for Sparrow because she knows. Sparrow knows her. She definitely is good with the retracing. I wish I could bring you on, Sparrow. I don't know if you're. If you want to come on, let me know, and maybe you can chime in. You know, we both can get in because your opinion is, your opinion is very valued, and you are a very good trader. So it'd be better for you to kind of speak on that if you could. But if not, if you just want to chill, hey, I don't want to take away from your vacation. More power to you. It's fine. But so the thing is, markets retrace numbers always. They do. The numbers repeat. They repeat. There was a pattern. There was a sequence in everything, in nature, in our life, in us, and it, like everything, it flows into the market. Okay, there's a harmony of numbers. So I haven't really talked about like the Fibonacci. I'm always kind of looking at that. Of course, I'm always looking at Fibonacci, but I try to generally simplify things down for the channel because some people just kind of straight in wondering, and for those beginners, I don't want to be talking calculus when we're still on addition and subtraction. You see what I'm saying? As long as we get those there, that's what all starts. So Fibonacci and all the other things for me always rest on the foundation of the trend. Okay, if a Fibonacci is telling me something that the trend is not, I'm going with the trend. I'm not gonna say, well, I should buy it because Fibonacci is pointing higher. Well, no. For me, the trend is the market. That is that's the daddy right there. You know what I mean? Like if the market is telling you, I'm going down, I want lower numbers, period, it's going to get lower numbers. And it doesn't matter if we somehow magically figure out, oh, well, look, our Fibonacci levels are, because Fibonacci's break, they will happen, but sometimes they fail. It's not like it's a 100% thing. It's all odds. So with a market, for me, the most important thing is what the market is saying. More important than the moving averages, more important than the stochastics, more important than anything is the price. Okay. And then from then, that's when I add things. That's when I start, that's when I start breaking it down with Fibonacci, moving averages, stochastics, MACD. Okay. But I don't want to get so much into that because sometimes you can, man. Again, when I first started trading, bro, I had every indicator under the sun on my chart. It was a freaking mess. It looked, like it was chaotic. Okay, there was so much. It's like, what are you looking at? Oh, well, I'm looking at this here. Well, what about the stochastics? Oh yeah, I guess that. Yeah, maybe the stochastics is going against. Well, what about the balance of power? Oh yeah, let me see that. That is wrong. There was too much stuff. There was too many things to look at. And slowly in time, that's when you start, process of elimination. What really am I looking at? At the end of the day, what's really making me take this trade? There has to be only a few things that I really, really like. Which are those in priority? And as I started doing that, that's again why I took off the 100-day moving average. And I want to do that more. But I think right now where I have it with the, and again, let me go back here and switch this back to the Heikin Ashi. I think where I have it right here, I think this is perfect. Like I can teach my daughter on this and she'll get it. And she does get it, this is enough. But if I have 20 different indicators, she's going to be like, I have no idea what you're looking at, Dad. This is, there's lines all over the place. Which one are you talking about? Because there's 20 different lines. It's hard to teach when you have all that information. And it's hard for you as a trader to trade when you have too much information. So I've been trying to kind of like simplify it and get rid of stuff. And again, like I said, this seems to be pretty good for me. I probably could even do without this guy here. I'll leave it there because it's good. But I could probably just do with these two here, the 50 and the 20 and my price and height in the Heiken Ashi. So I just, yeah, so again, that's why I don't, you know, start getting into the Fibonacci. It's beautiful, it's awesome, but you know, that's like, you know, level 20 we're right now. And you know what, and again, look, all these people who made money in stocks that you and I maybe both know, or you know what I mean, just people, everybody buying stocks, you know, and they were making money. Did they know Fibonacci? They didn't. So why were they making money? Why was so many people making money? It's easy, the trend. They were all trading with the trend. That's it. You could, David Tepper, one of the big hedge funds guys, when the Fed started easing, you know, and had this, you know, stock buybacks and really easy monetary policy and all this printing that they were doing, the minute they started printing, David Tepper came out and said, buy blindly, just buy whatever is on the and he's talking about, you know, like the you know, a lot of the mega corporations and the tech stocks like Tesla and whatnot, that these are benefiting from that. That's what he said. He said just go out and buy blindly, because when the Fed does that, everything goes up. That's the trend. That's the trend. So again, people make money off of it without even knowing about it. But you know, Fibonacci is second, maybe even third to that. I use it, but it's not more important than the market, because again, the most important thing is what the market is telling you, not what the moving average is telling you, not what the, and again, this is me, guys. Sparrow might be like, well, I disagree, because she has her things that she's looking at too. So I don't want to speak for everybody, but I'm saying for me, the market is who I'm having a conversation with. So if the market is saying, yesterday I was at 100, today I'm at 105, and before that, last week I was in the 90s, and the previous week before that, I was in the 80s. Where do you think I'm going? Well, naturally, I would say you're going higher. So for me, I want to really converse with the market. I want the market to kind of tell me. So that's why I say I can erase all of my moving averages, the stochastics and the MACD, and just start there, you know, with the market telling me what it's, you know, where it wants to go. And then after that point, all I have to do is adjust myself, not fight the market, not challenge the market, but say, okay, if you're going higher, then let's go higher. Let's do it. So let me buy some shares. Great. That's how I want to do it. So price is king. Price is most important thing for me, more than anything else. And all these other things are just, you know, little details, bells and whistles. Okay. But it's not the meat, not the meat of how I trade. And that's how I trade, guys. Some man, I met some traders though, and they have all kinds of craziness on the screen and, you know, all that works too. You got to figure out what works for you. But I think for me, if I can teach my daughter how to trade and she could outperform the market, then I've done a damn good job. And that's how it is. It has to be simple, because the problem is not the market. The problem is us. We overcomplicate, pardon my French, but we overcomplicate a lot of it. I'm not going to curse, because I know my daughter's watching and whatnot. But listen, we overcomplicate this market. We come up with all kinds of things, and you know, start looking at the freaking, you know, cycles of the moon, you know, to trade this. Okay, and hey, if that works for you, more power to you. But I'm a minimalist. Okay. Even in my life, I don't want to complicate things. I don't want to overcomplicate things. I want very simple. I want the path of least resistance for me. Okay. That's how I kind of want to do it with the market. Just tell me where you're going. That's enough. What direction are you going? Then from there, that's my starting point. But again, I'm teaching my daughter how to trade, and she's starting to be consistent. She's starting to recognize, okay, I see this, I see that, I see it. It's simple, and it should be. It should be. The only time sometimes people I remember in the brokerage world, in the financial planning world, you never wanted your client to know more than you. If your client knew more than you, guess what? You weren't going to make any money. And you know what they would say? If you're talking to somebody who knows about the financial world, you don't want that kind of client. That's what they would tell you. Don't even waste your time. What you want is somebody who doesn't know about the market. You want somebody who does not plan their money. They don't know what they're doing. That's what you want. You want somebody who's pretty much ignorant, because then, anything you say to them is going to sound like, just rocket science. So they're going to believe you. They're going to say, oh, this person knows so much, So where I'm going with this is that it's very, very simple. And a lot of times we just overcomplicate things and we make it more complicated than it should be. Either the stock is going up or it's going down or sideways. That's it. I know it sounds like kind of, well, I know that. I've read that 100,000 times. But really it is. We know this, but I can tell you how many, if you go and ask people, what are you doing? They'll be buying a stock they'll be shorting a stock that's going up, or they'll be buying a stock that's going down. But yet we've read thousands of times not to do it. Why do we do it? It's just our humanity. Our humanity does it. But off on a rant, guys. And again, I'm not trying to belittle or insult any of you guys watching. I'm not trying to do that. I'm just kind of ranting. I really do think, though, that if you can simplify this and make it very easy, and it's going to give you the best odds for success. Okay, because you shouldn't overcomplicate it. A lot of people kind of lose money because they have so much stuff on the screen. They have so much that they're looking at. You should look at a few key things. All right, so look, let me sum it up like this, because I know I've been kind of talking. Let me sum it up like this. Trade with only 2 indicators and don't change it. Do not change those indicators. Do not change the calculations of them. Trade with just 2 indicators, or if you have your moving averages. Trade like that consistently. Make 50 to 100 trades, and I'm not saying with real money. Probably don't use real money. Okay, this for the people who want to trade, who want to get to consistency. Okay, this is what I would say. Have you taken 100 trades, and have you used the same indicators on those trades? If you have done that, then show me your results. Because if you've done that, you have a good basis for success, because you haven't screwed with the recipe. Okay, I don't care if you're using the MACD or balance of power or CCI, RSI. I don't, whatever. There's so many. Pick what works for you. What works for me is the stochastics and the MACD, but pick what works for you. Maybe for you it's the RSI. Sparrow has her favorites. Okay, those that every time you see Sparrow's charts, it's her chart. That's what she's looking at. She's not every week a different indicator or whatever. It's the same thing. So you want to get to that point too, where you have your go-tos. Don't have too many, just 2, or else you're going to confuse the heck out of yourself. Just do 2 and take 100 trades, fake trades, paper trades on those. And you'll see if you have consistency. That's the starting point. But you know what? I will be honest with you. Most people will not do that. Most people will say, I don't want to do 100 trades. I'm not going to make any money there. But you haven't proven that you even can make money on paper. You haven't taken 100 trades. So, you know what I mean? You're ready to go to the championships, but you haven't put in your 1,000 hours. So why is this different? This should not be different. This is the same exact thing. Practice, practice, practice. Don't change what you're doing. simplify it and go with it. And if you want to make it complicated and do all kinds of, again, looking at the cycles of the moon and all that stuff, if you want to do that, don't do it. Do it on 100 trades. Don't change it. See what your results are. But if on Monday you're looking at the cycles of the moon, and then on Tuesday you're over here bragging about fundamentals, and then on Wednesday you're just like, the news is telling you to buy, you are all over the place. You're just, there's not even a consistency in how we are trading. So we want to get in that we want to develop our systems so that they are not changing, they're not being tweaked, and we use them over and over and over and over again. And eventually you'll get to that point where you say, you know what, I really don't like this indicator. I've used it on a lot of trades. I really don't like it. It really is kind of like in the shadows. It really doesn't do much for me. So I'll clear it out. So for me, and that's at that point, that's when you start getting into simplifying your trade. And again, that's why I say I don't have Fibonacci on the charts, because it's just, we want to kind of simplify it to the nuts and bolts and then start from there. And I know I've been kind of going off, guys. So I'm going to take a little break. But before I do that, let me get into the chat real quick. I don't want nobody to be ignored. Let me see here. Need linear regression, standard deviation, FUBAR, yeah. Sparrow says, I only use fibs when I'm forced or someone asks. Yeah, exactly. I mean, you can kind of see the Fibonacci. You can kind of see it if you, like for me, there was a point in time where I was putting that damn thing everywhere. Every chart I was, putting the Fibonacci levels and whatnot. But after you do that for so long, you really don't need to plot it. You just you can kind of like eyeball it, and see more or less. And then you can get into, okay, well, what are the real specifics? I want to kind of know what is the actual like target for the Fibonacci if you want to do that. But again, those are extras. So I hear you, Sparrow. I put it on there when I really want to get into specifics, I guess you could say. But, more or less, as long as I know, generally, that it's in agreement with the trend, for me, that's good enough. If the Fibonacci is in agreement with the trend, I'm good. I'm good there. Ishini says, Lugdor and his pitchforks. Yeah, you know what? I have seen, I think Lugdor has a crazy chart, man. I believe that's wild. But man, if that works for him, again, I'm not here to say my way is better than your way. That's not it. But I am here to say that simplifying your trading is just going to be good for you. It's just going to help you. Okay. It's just going to help you when you can kind of stand back and look and see, okay, what do I think about this? And very simple, know where it's kind of going, and then start from that point. That's what cripples a lot of fundamental traders. They become like accountants. I'm not an accountant. I don't want to be an accountant. But some of these fundamental traders and investors, they are poring over sheets like if they are accountants. It's like they're trying to find a certain, I can find here. They're going to, this is going to be a good quarter for them. There's too much information. Simplify it. Pull up the chart. People buying it or selling it. That's all that matters. My opinion. I'm actually going to backtest my trades with the moon trading indicator and see how it would have done. Hey, man, that's what I'm saying. I'm not trying to kind of like laugh at that, but that's exactly what I'm saying. Take the same trades, 100 times using the same things. And then you're kind of going to know whether the indicator works for you, whether it doesn't. You're going to know your consistency, but you got to practice. So backtesting backtesting should be practiced by every single trader, in my opinion. I think you should practice backtest as much as you can, because it just, it's basically practice trading is what it is. Stock says, make it simple, stupid. That's for me, man. Yep, the famous phrase, make it simple, stupid, for sure. FUBAR says he's definitely a minimalist in the hair department. Yeah, man. I've been having the same haircut like all my life, man. Always usually a little fade or whatever. Blowout. Number 4 on top. I mean, just simple, man. Just simple. But there was a time when I would bleach the hair and whatnot. That was fun. That was actually quite fun. At one point, I had green hair. It was kind of crazy. I told my daughter that the other day because meet Kevin. You know, I follow him and he had like green hair or red hair or something like that. I was like, I remember I had green hair. So, but yes, man, minimal is key. You know, that's a key. Keep it, kiss. There we go. Kiss. Now, Fubar says, I would say risk and management come first, even before any chart or indicator, and stick to that 100% of the time, more or less. I would agree with that for sure. You should always know how much you're going to risk and how much capital is going into that position. Absolutely, because that's the starting point. So you need to see. Yeah, you know what? I should start like a channel on my Discord and post all the. I don't even have much pictures though. Yeah, that's crazy. I don't have any pictures of me with the when I had green hair. I think it was like a day or two though. I think I literally, guys, I think I had like green hair for like a day or two, and then I was like, I can't go to school like this. So most of the time back in high school days, it was just bleaching my hair. I would bleach it like as blonde as I can get, as white as it can get. That was big back then. That was, you know, I don't really see a lot of people doing that now, but like remember Gwen? For those of you who know Gwen Stefani, she would, you know, she always had that really bleached blonde hair. Or is her hair that real? I don't think it's really that color. Anyways, I'm going off talking about Gwen, from stocks to Gwen Stefani. But guys, I'm gonna take a break, grab a little snack, and then come back and we'll get into the other. What else do we have? Oh, okay. Chikabawa is asking about a stock AA. So what I'm gonna do, guys, is I'm gonna load it up right here on the screen. You guys take a look at it, see what you think, and then when I come back, I'll give you my take on it, and then probably wrap it up there for the evening. I don't know. But yeah, I'll leave it up on the screen. You guys look at it, you know, pull it up on your own charts, see what you think about AA, and then we'll compare notes when I get back. So let me see, put this back here on. Oh, okay, I need to put this on. I'm not going to be able to do that. Maybe I am. All right, let me see if I can put this. I've adjusted my screen, guys, so this might look a little weird. There it is. It's in the wrong spot. Let's move this. Oh, see, and it's not above where it needs to be. There we go. So let me put this. We'll be right back.
In a chilling address today, Putin urged Ukrainian troops to turn against their own country.
Okay, let me put this here so that this way the screen does not disappear. And then let me see. Is that good? No, that it's clipping. It's clipping. So let me move this down here. Move it here. There we go. It's still, how does that, that's good, right? Yeah, that looks pretty good, guys. I know you can't see me anymore, but all right, guys, so I will be right back. I'll leave the charts up. Okay, so have a look at AA. You all pull it up, and like I said, when I get back, I'll tell you my take on it. So I'll be right back.
Here again, we have no way to verify that report. This is surveillance video showing a column of Russian military vehicles pushing up from southern Ukraine. And look at these Russian soldiers trying to break and disable the cameras in an attempt to hide their movements. We're seeing some harrowing scenes in Kyiv, gunshots fired into the air by security at a train station, crowds of desperate Ukrainians, some with toddlers in arms, trying to pack onto trains to escape this nightmare. Dramatic video from a suburb of Kyiv shows an armored military vehicle swerving and crashing on a coming car on a public street. Bystanders able to pull the driver out of the wreckage. He reportedly survived. Full coverage ahead. We begin tonight with Matt Bradley, live in Dnipro in eastern Ukraine. Matt.
Yeah, we just heard from President Vladimir Zelensky. He has made a series of increasingly dire speeches over the last several days, including ones in Russian, appealing directly to the Russian people to appeal to their president, Vladimir Putin, to stop fighting. But tonight was the decisive night. He told his people that they had to defend their whole country, but particularly their capital, Kyiv, which is under an increased threat tonight as Russian forces surround the capital and move in from several different sides. He said it's been a long day, but it's going to be an even more complicated night. He called on all of his citizens to rise up, to defend their country, to defend their elderly, their children, their women. And he said that this was a decisive night. This is the night that it's going to happen. Shep?
Matt Bradley reporting from eastern Ukraine. Thanks. Russia continues to wage this war on 3 different axes. The first, really from 2 positions in the north, from Belarus down into Kyiv. Of course, in the middle, that's the Chernobyl containment zone where the nuclear disaster happened. That's already been seized by the Russians. The second part of that one, from Russia down into Kyiv. All of this, we're told, underway tonight. The second axis, from Russia here down into Kharkiv. That city is still contested, a city of about 1.4 million people, about the size of Philly or Phoenix. Reports are they're still fighting there. The Russians had already flown in more troops. Of that, we were already certain. And the third axis is from the south, from the Black Sea. There's an amphibious assault underway now, according to U.S. officials, heading in 2 directions with thousands of Russian naval forces there. They're heading toward the city of Odessa here in the very south tip and into Mariupol, an area that would create a sort of land bridge down toward Crimea. To talk about all of this, we brought in retired U.S. Army Colonel Jack Jacobs. He's here with us tonight in studio. A Medal of Honor recipient for his actions during the Vietnam War, now an NBC News military analyst. Colonel, thanks so much. The president says they're coming in there tonight. We know it's faced heavy bombardment in Kyiv. The president says he believes that they'll storm the city. What does that look like?
Very unpleasant, to say the least. I fought in cities. It's extremely difficult, even if it's not well defended, and this will be well defended. Likely to be quite a few casualties on both sides. And if Kyiv is going to be captured, it might take a while. In any case, the move from Belarus down through Kyiv is very, very important for the Russians, because if they don't take Kyiv, they can't link up with the forces coming up from the south. And they want to do that because they want to bifurcate the country.
Yeah, anybody who wondered why they took the Crimea 8 years ago, well, now you know.
Yeah, it's obvious now. And by the way, this has been going on for a long time. The whole concept of doing this has been on Putin's radar for a long time. He's been planning this for 2 decades, and now it's come to fruition.
The rockets over water from the south, why are they there, and are they any closer to Kyiv from coming up from the south?
Well, the purpose of coming in from the south is to cut the country in half. Yeah. If they link up in the middle of the country with the forces coming from Belarus through Kyiv, meet up in the center of the country, they'll cut the country in half.
Speaking of Belarus, they came from Belarus through that Chernobyl nuclear containment zone and took it in less than a day. That's a danger area in and of itself, isn't it?
Well, it's radioactive still and will be for a long time. But it's really important for the Russians to take it. It's 2 things. The first is it's symbolic. Yeah. It was part of the old Russian Soviet empire, and they wanted to take it, just to take it. But it's also the fastest route from Belarus down to Kyiv, and they wanted to get to and through Kyiv as fast as possible.
But before we go, this idea that the Ukrainians are fighting is inspiring and beautiful to see. The president out there in the streets with his people saying, we will fight, we will fight. There's a reality there that they're vastly outmanned and vastly out equipment. They own the skies. And if Ukrainian President Zelensky is right and they take the city, in your estimation, from your knowledge of Putin historically, what happens to the President Zelensky, his cabinet, and his family?
Well, I think he'll be arrested and probably eliminated. I mean, the people who
eliminated.
Oh yeah, I think Putin
so when they use the word decapitate the government, it was
Yeah,
a word they meant.
Yeah, they're really serious. And if, as and when they do take all of Ukraine, we have to be on our guard because they're after northeastern Europe as well.
Colonel Jacobs, thanks so much. Vladimir Putin now getting hit by sanctions directly. The U.S., Canada, European Union, and the U.K. all announcing they're moving to freeze Putin's assets and those of his foreign minister, Sergei Lavrov. The impact, questionable, because Putin's finances are very much a mystery. There's little verifiable information on exactly how much money he holds and where, though he's widely believed to be the richest man in the world. And these sanctions will not ban President Putin from traveling to Europe at all. That, we're told, is to keep diplomacy open. Putin saying today he is willing to send some of his diplomats to Belarus for talks with Ukraine. That is far short of what the Ukrainian president has been requesting. In a video message today, President Zelensky says he wants to talk directly with Putin.
All right, guys. Test. Let me take this off the screen. All right, we're back. Okay, so where were we?
And they're discussing when and where.
We are at
Taylor now, former U.S. ambassador to Ukraine.
AAA, or no, AAA. Alcoa.
Some deputies for talks while he is
so let's see here.
City. It sounds preposterous.
What do you guys think?
You're exactly right.
What do you guys think about AA? Fubar says, gotta go, guys. See you later. Suggestion: if you upload on YouTube, make clips with the most relevant things from these long stream sessions. Yeah, for sure. Cut out the green hairs. Yeah. No, I got you, man. I got you. Yeah, I wanna. This week I'm gonna be making a YouTube video, probably like a market recap or something. But I'll be uploading to YouTube. So if you're not following me on YouTube, please follow me. I have a very pathetic following right now, guys. So I could use the followers. Also, I am on Discord, and I want to invite you guys to be a part of my Discord. That's where I kind of pretty much, put news, whatever, little market conversation. So I'm going to generate a link here, and I'm going to give this to you guys. So if you're not following me, you are personally invited from me to follow me. Okay. And oh, and I just saw Sheeny's message. Sorry about that, Sheeny. I didn't respond. See, I got to get on him on my YouTube. But yeah, anyways, guys, follow me on my Discord. That's gonna be like the hub, and I'll announce if I'm gonna, any changes to the schedule, whatever, you know what I mean. If I upload a video on YouTube, I'll put it here in the Discord. So you guys are invited. Let's see where we're at. So Chicka Bow Wow says earnings are Tuesday. Wonder if someone knows something. All right. Well, let's see what the market is telling us. Let's start there. Let's do this all over again. Let's simplify it. So, what do we got here? Are we in an uptrend, a downtrend, or sideways? Okay, that's what I want to teach you guys right away. What are we in? Okay. So you guys can see we're in an uptrend. For those of you who said downtrend, you're making fun. Okay, but look, we're in an uptrend. Okay, this is good. People are buying it. That's strong. Okay, no moving averages, no nothing. Just looking at the price. Where are we at? Price is going higher. Okay. And again, I'm putting it on Heikin Ashi because that's going to help us to see the, it cuts out a lot of the noise and just lets us see very simply, what the trend is. So we have an uptrend on the daily. All right. The dad is saying, I want higher prices. Let's switch over to the wife. Does the wife agree, or the weekly? W for wife or weekly? What is the weekly saying? Well, have a look. The weekly is also saying, yes, I want higher prices as well. I like these prices. Let's continue going for higher prices. So you have a weekly and you have a daily in agreement that the stock wants to go higher. So if you are shorting the stock, you're not looking at it. I don't know what you're doing, but you're not looking at it. Maybe you're looking at the fundamentals. Maybe you're looking at the news, but you're not looking at the chart. The market itself, the stock is telling you it wants to go higher. At the end of the day, that's all that matters. The news, all the other stuff is fluff. It's not fluff, okay? But it's secondary, okay? It's not the reason, okay? So you don't put that above what the market itself is telling you, okay? It's kind of like if you ask your friend, hey, what should we eat, right? It's better to ask your friend generally. You want to go out? You want to grab a bite? Yeah, sure. Where do we go? The worst thing to do is to call your friend's brother or your sister and say, hey, does so-and-so want to go out? Where does he want to eat? Where should we eat? Because now you have a middleman. You know what the middleman is in the market? The news, the fundamentals, okay? If you're going there first, skip all that. Go straight to the source. Go straight to the source. Go to the chart. And I say the chart because the chart is the stock. It's the prices, okay? So let's look at that. So again, you have a bullish daily and we have a bullish weekly. So if we're going, bearish, we're fighting against this, okay? What do we want? We want the odds in our favor. Give me a second, guys. I need to put more of this chapstick. It gets so cold down here, guys, that it's like drying out the lips. First time ever using chapstick. Stock, in Miami, we don't use chapstick, bro. It's nice and humid, but down here it's so damn dry and cold and stuff. But it's also beauty in both seasons. I can appreciate both of them, so it's nice being able to have that sweater weather. It's cool. I enjoy it. Anyways, all right, so look, we have an uptrend, okay? So that's great. Let's plug in, now that we know where are we heading, where's the stock heading, let's plug in the rest of the information. So we look at our 20-day moving average. This is nice, okay? If the stock is above the 20, that's game on. That's good, okay? For a swing trader, for someone who's trading for a few days to a few weeks, that's good, okay? The 20-day is if it's above, it's fair game. So the 20 is also saying, hey, this is bullish. I'm bullish on the 20. How about the weekly? Look at that. My gosh, look at this. Beautiful. This is a beautiful trend, man. Look at that. It did not break that 20 on the weekly in 1.3 in over a year, guys. In over a year. And look at that trend was so powerful. It gave us 400%. So do you guys see what I mean? Now, do you believe me when I say the money is made in the trend? This is where you make a gang load of money, guys, right here, because it's just moving in your favor. You're just, you could stay in a stock like this, or you can swing trade it bullishly, for the whole year and make money. The trend this is where you make your money. You make a lot of money in the trend, whether it's an uptrend or a downtrend, okay? So this is beautiful. And so right now, where are we? Okay, it's also, again, it's over the 20 on our moving average in the weekly and on the day. Beautiful. Let's plug in the 50-day moving average. All right, but this is pretty obviously, if it's above the 20, most of the time it's going to be above the 50 if it's trending higher. So we have bullish on that as well. It's above the 50, obviously. So, and on the 200, there you go. Okay. So again, this is extra information, the 20 and the the 200 and the 50, but still, let's just put it there. Okay, the most important thing is the trend. So from that point on, it's just a matter of where you're going to enter into the trade. Okay, you already kind of know the direction that it's going. If you want to trade counter, you're trading against a trend. And where would that have got you all year trading against Alcoa? Okay, you would have got knocked out every time you traded it short. Okay, so I would say we would start. For me, I want to be a buyer of this thing. Okay, I want to go with the direction that the market is telling me it wants to go, and it's just a matter of time now. It's a matter of figuring out when am I going to get in. Okay, so at this point, we can switch over to the regular candlesticks because the Heikin Ashi is calculated differently, and then we just kind of figure out where we're going to get in. For me, would I buy it here? No, I would not buy it right here. I mean, you could. This is where what Fubar said. I believe Fubar said, yep. When he mentioned in the chat, he said, I would say risk and money management comes first before any chart or indicator. This is a good example of, now that you know the direction you want to be on this stock, now how much are you going to put into this position? How much you're going to risk? Okay, what is the risk on it for the potential reward? Well, we don't know the reward. We don't know if a stock's going to give us 5% or 50 or 100%. We don't know, but we do know how much we're going to risk. Okay, so we can say, well, I'll risk 5%. So if we were to risk 5% on Alcoa and we were to buy it here, 5% is basically right about right here. Okay, 73.47. Oh, sorry, wrong way. Okay, so if you bought it here and you say 5%, that is pretty much right here. Okay, so there's a high likelihood that you'll get knocked out. Okay, because this stock trades normally, it has a range of $4. Okay, so it doesn't take much to kind of knock you out. You're like $1 more for the true range of the stock. If that confused you, just forget what I said. Okay, the most important thing now again is, where are we going to get in? Okay, a good point in getting into a stock is trying to get it as close to a moving average as you can. For me, okay, I would rather get it here by the 20 than be way out here. Okay, I want to get it here, because as the stock comes back, which is called a pullback. When it pulls back, it usually pulls back, rests, and then it continues on. Okay, but it continues to visit its moving average. So I would want to get it closer to my moving average as I could, or I could do like my man Stock likes to do, which is buy the breakouts. I know Stock, you're a big breakout player. So and Stock is out right now, but breakouts are also good points of entry. So if this can move higher and break above this high, you could enter at that point and then just put like the stop, maybe 5% or whatever it is, whatever you're comfortable with the stop. But yeah, I would say if you can get it here, if it breaks out and it's a good breakout, I don't mean a weak breakout, I don't mean a small little candle breakout, but I mean a nice big breakout to the upside. That's a good sign that the stock is gonna wants to move higher. Okay, so all you do, put your stop. So in case it does not continue the trend, you're not going to get you're not going to get hit. You're going to you'll take your losses, and then you'll try to get in again, and eventually you'll catch a trend. Okay, but you don't just kind of like get into the trade without a stop. So Chikabawa, I would say on AA, I am bullish on this. But now here's the thing. I do not trade earnings. Okay, I don't trade them because earnings is a 50-50. There is really no odds in earnings. It could go up, it could go great or it can go bad. But my experience with earnings is that earnings is unknown and it's a 50-50 player's game. I don't like those odds. I don't like trading a stock if my odds are 50-50. That sucks. Okay. I want 80. Okay. I want 80-20 odds or more if I can get it. But 50-50 is, no, I don't want that. That's a sucker's play. Not calling anyone a sucker who plays earnings. Okay. Not saying that. I know a lot. But for me, and I will tell you guys, if you are playing earnings, it's only a matter of time before you get hit and understand what I'm trying to tell you. It's a matter of time. You could have earnings come out, amazing, fantastic earnings, and the stock plummets 30%. You know, it makes no sense. They just announced fantastic earnings. The stock is in an uptrend. Why did it plummet? Because earnings are unpredictable. Okay, they are. And there's so many examples of this. Okay, so for me, this is how, you know, I used to have a motorcycle back in the day. And a couple friends used to tell me there's two types of motorcyclists. Okay, there's motorcyclists who have crashed and have laid the bike down, and the ones who haven't had it happen to them. Okay, but eventually you're going to let it down, or it's a matter of time. And that was a very extreme statement that some of these guys would make. But eventually I went down. Okay. Nothing happened. Thank God. But I got hurt, you know, it hurt. And there was no traffic. Again, thank God for that, because that would have, you know, been who knows what. But, you know, I learned that, you know what, yeah, eventually if you're kind of getting, you know, loose with it, and you like to kind of giddy up on the gas and do those, you know, pop the wheelies and take those shots. Eventually you keep playing it, you know, it's a matter of time before you get a little too low and you're going to slide the bike. And it happened. Okay. And that's how I feel with earnings. You are playing the earnings. You might be doing pretty good, but when you get caught, it could be a disaster. It could be it could ruin your whole year. Okay. So I don't have a good out for people who play earnings. You know, again, I'm not trying to tell you guys how to do it. We're all grown adults, but I don't recommend that you do it. Okay, because I don't want to see you guys get hurt. I don't want to see anybody get hurt. Okay, I don't want to see anyone blow out their account, and I've seen it happen countless of times with people who play earnings. The stock is up. You know, even people saying even people who maybe know what the earnings are going to be, and they get in early, they get a shocker when it goes the other direction. You know, that's happened. People know, they have inside information. They go and they load up, and the stock takes a dump. You know, you shouldn't trade off inside information. So, you know, that's pretty much the karma of the market. You know, for those who cheat. But, you know, nonetheless, it really is a risky play, guys. And there's no way you can really measure these things. You know, earnings are kind of strange like that. Now, there are, you know, ways that you can trade it, and, you know, but for me, I just don't do it. So if I was in AA, okay, I would be getting out. When is earnings? Okay, we don't have earnings for a while, right? Oh, wait, no. Earnings was 25th. Yeah, okay. So was earnings, I don't know if earnings was today, if they announce it, but today is supposed to be the earnings on this thing. So look, I would have been out of this stock yesterday. Okay. If earnings are on the 25th, I am out on the 24th. Okay. And I will get back in after the 25th. So if on the 26th it looks pretty good, I'll get back in. But on the day of earnings, I don't want to be in the stock, okay? Because there's just too many factors out of there's too many odds against me, okay? So AA, I would have dipped out of. And if you absolutely want to play earnings, just do me a favor, guys. Do yourselves a favor, not me, but do yourselves a favor and don't be like in 100%. Okay, like 20% is fine. You know, if you absolutely like, I don't really want to, you know, I really like this stock. It's been in a good trend. And I'm talking about traders, not investors. I'm talking about traders. You guys are making multiple trades a month, or, you know, So you have your, you know, you're not trading for like tax benefits or, you know, capital gains or anything like that. You're a trader. You're doing that. With the earnings, I always get out. So as you can see here on my chart, guys, you can see where it says next earnings right here. That's why I have it here. Because what I do is every day before the market closes, I look, and anything that's gonna, if the earnings are tomorrow, I sell out of all my positions. I don't care where I'm at. I just sell them. I sell it out, and then after earnings, I'll see if I get back in. But you know, so Chicka Bow Wow, I would say that earnings were 219. Oh, that's weird because it says right here. Oh, wait. What am I doing? I'm looking at the wrong. Apologies, guys. I'm looking at the wrong chart.
On the campaign trail promised to name a black woman to the Supreme Court. Chef?
Kayla Tausche, live in DC.
Yeah, okay. Yeah, so the next earnings is right here. This right here. Next earnings is on the 21st. April 21st. Next earnings. So on that day, I would be before that day I would be out of the chart. So 119 was on TradingView. Okay. So so that being said, earnings are gone. What do we do now? It really didn't do much for earnings. You know what happened on the 19th? Wait, was it 219? But Sparrow says 119 according to TradingView. Let me load up my. Let's see here. What it says.
And it notes, of course, anyone may choose to wear one. The change also applies to schools. Only those in high-level areas are recommended to wear
Yeah, we're out of earnings. Earnings I see here was way back in the day. Well, way back in the day. Yeah, 19th. That's what I see too. So, anyways, whatever. Okay, there's no earnings, so we don't have to worry about earnings. So, I like this. I would be bullish on Alcoa. Now I don't buy this though. Well, let me see here. What's a good price? Let me see here.
According to the head of the United Nations Refugee Agency,
Let me see here.
50,000 Ukrainians are already fleeing their country and have done so in the last 48 hours. The UN warned that fuel, cash, and medical supplies are dwindling in Ukraine, and that could force 5 million people
Okay,
to
so
evacuate the
look.
country in the days ahead.
This is a nice day here.
Have fled to neighboring Moldova, Poland.
And what happened there?
Operations are underway
Breakout.
to deal with a flood of refugees.
So this right here would have been for me. This is when I would have kind of looked at. Okay, cool. I would have bought it, and I would have put a small. The range on Alcoa, we got a range of $4, give or take. So if we were to buy off of that breakout and put about a $4 stop, it's about a 5%, 6% stop, and it would have eventually hit it, and it would have hit it. It would have hit it yesterday. So we would have got stopped out and I would have been down. If I was trading it, I would have been down 5% on Alcoa. Now, would I get back in? I would not get back in. Okay. If it broke out and it came back down, this is kind of, it didn't break under the 20, but I'm not going to buy it until it makes another breakout. That's how it's not like, oh, I got stopped out. Well, let me just get back in because it's, trading back again above the 20. I just would rather wait until it makes a real breakout, another breakout, and then try to get back in and trade it that way. But look, overall, Chick, I'm bullish on it. Okay. You just got to figure out now where you want to get in and out. If you were to buy this thing, a good way to kind of, set stops is just to look at the range of the stock. What is its daily range? And then set your stop accordingly. Okay, so if it has like this has again, it has a daily range of $4.08. So if you bought it here, chances are if it opens up on Monday at 77.86 right here, chances are if it does go down, it's not going to move down more than $4.08. Okay, that's not like a guarantee. That's not like, oh, it can't do that. It can, okay? But generally the stock trades $4 every day, give or take. From the high to the low is a $4 range. That's its range. So when you know that information, you know that if you set a stop, let's say you buy the stock and you put your stop at $2 under, well, it's probably gonna get hit because the stock trades $4 on average, and you're setting a $2 stop, so you're gonna get hit. If you buy a stock that like this one, let's say you buy it and you set your stop at $20, well, that's pretty wide. The stock trades $4 and you're putting a $20 stop. That's like really kind of out. So I like to look at the range of what the stock is trading to kind of give me an idea on where, of course, we're looking at our resistance and our support levels and whatnot. But another good piece of information to have is the range. Because if you can get the stock close to like a support and you know that the range is $4, you know that, wow, I bought this thing $1 off of its support and it trades $4. So if I'm like $1 and right at the lows, chances are it's going to go to the upside. So I'm already there. You have a 4-to-1 risk ratio. You're risking $1 for the potential to make 4. So you see that having the range of the stock is very useful information. It kind of gives you, if you buy the stock at the high, that's kind of bad because you're buying at the high of the range. That's probably not a good strategy. But if you buy the stock, if the stock is down, $4 and you look at the range and the range is $4, you're like getting it right at the bottom. So that's why I like to look at the range. I think the range is pretty vital information. So and I say that again because that can help you to set your stops. So what would I do with Alcoa? I would wait until it breaks out above the high right here. The high is what? Right here we got a high of let me make sure I'm not on the, yeah, okay, I'm on my candles. So you have a high here of $80.80. So once it breaks above that $80.08 and holds it, okay, it doesn't just break above and then come back down. You don't want to see a tail. You want to see the block closing above that price. Once it does that, for me, that would be the time to get in. And trading for me is all about timing. I want to be in. Once it breaks, that's where I want to get in. You can get in, a few days later sometimes if you maybe have a good price. But if you get a good stock and you catch it right at that catalyst, right at when it breaks, then it's off to the races. You can't catch it sometimes. If you make a good trade and you don't get it off right when it hits, it's hard to catch it. It just kind of takes off and you can never catch it again. That's also why I don't sell stocks when they're running. When they're continually moving high, I don't sell them because there is, and I talked about this. Okay, I want to say this again because it's very important. You guys have heard of the saying, you can't go broke taking a profit, right? That's garbage. Okay, that really, you can. You trust me, you can go broke taking a profit. And I mentioned this before because let me explain. And let's go back to Alcoa Aluminum. Okay, let's say that chick bought the stock right here, $14. Chick, you saw it, you're like, yo, this is a good price. It's breaking above the 50, looks good. You go and you buy the stock, okay? And then you get a 20% jump in a week, okay? Let's say here, let's do this, okay? Let's rewind it so we all could be on the same page, okay? Because this is important, I'm telling you. Let's say, chick, you bought it right here, okay? And then the stock does this and you sold it here. You made 40%, okay, in a couple weeks, okay? And you know what? this is a very extreme example, but still, it'll drive the point that I'm trying to make. Let's say you sold it a couple weeks and you made 30% on it. That's damn good. Congratulations. That's an awesome trade. Not bad, okay? But here's the problem. Let's say that, you know, if you would have just taken profits, let's say you got your 30% and you took 50%, you put in your pocket. You say, you know what, I'm already in the green. I'm going to take 50%, put in my pocket, but I'm going to leave, you know, the other 50 on the table. Or maybe I'm only going to leave 25% on the table, okay? But it's in an uptrend. It's still doing pretty good. I'm going to buy it. I'll leave that kind of just, you know, I'll just leave it running for me. Why not? The stock, as long as it's going up, I'll leave it there, right? And if you would have did that, okay, now you're adjusting things, okay? Again, this is an extreme example, but it drives a point that I'm trying to make, okay? You can never go broke taking a profit. So you sell here, you make your 30%, you're happy, right? But look what happens. Okay, look at that. Okay, if you were happy with your little 30%, that's not bad. I'm not gonna laugh at you for that. But if you would just maybe left a little bit there, that 30% would have turned into 200%. Okay, and it's still going, bro. It's still going. Okay, right now that would have been 400%. So is this going to be every trade? Of course not. Of course not. That would be, you know, ridiculous. Anyone who tells you this is like this is one of those rare trades. But this is one of those rare trades that I'm telling you guys about. If you have one trade like this, just one trade for the whole year, you've made your money. You're in the green. I mean, you know, if you're managing your money correctly, you made out like a bandit. You did really good. All it takes is one or two stocks to just, you know, give you that, and you're good. So there's people in this, and if I was in this, I would still be in it. I mean, not the whole position, okay, but I would still want to have a position in it, because for the most part, it's been holding above that 20-day moving average. So my point is this: when you sell too early, you destroy the opportunity for you to make even more if the stock is running. So rather than do that, don't deprive yourself of a stock that's moving in your favor. Let it move for as long as it's going to move, guys. If the market is telling you, I want higher prices, you sold me at 30%, but I'm willing to go to 35%, take it. Okay, let the market go where it wants to go. Okay, now most of the time they'll come back, and that's fine. But when you get those one or two, they make your whole year. You only need one or two things, and you made this is a good home run. So that saying, I would say you can never go broke taking a profit. Be careful with that, because again, yeah, what would you rather have had, 30% or like 400%? Well, if you would have made a lot of trades, that 30% would be good, okay? But that 400% would have basically put you in the bank. So my strategy is, as long as the stock is moving in my favor, I will let it ride. Okay, whether it gives me 4%, 40%, or higher, I'll let it ride. Because when you get it right and they just kind of take off on you, that's the home run that you're kind of like looking for. And again, you're not going to get that. I'm not trying to say, you're going to get this. It's going to be rare. Okay. It's going to be rare, but when you get it, your account will fill it. So, anyways, that's my take. I say, bullish on it, but I would wait for a breakout if I was going to kind of go into this one. So, and I'm missing out on the chat. Guys, I know I ramble. I just go off. I like to just kind of go with it. But let me get back. Let me see, because I don't want anybody feeling like I'm ignoring them or whatever. So let me see here. Yeah, Chick, I don't mess with earnings.
and Ukraine.
The Rambler Krampus telling a story back in my day. All right, so let me get there. He'll get there. Please be patient. Sorry, 119. Yeah. They beat earnings. Okay. What's up, Purple? How you doing? Purpleton. Welcome, welcome. So stock says one that is in the same group and actually a strong stock within the group is Rio. I see a cup and handle that it can break out of. All right, so
Russia and Ukraine would be in China's interest because they would potentially get Beijing out of the awkward position of appearing to dismiss its own foreign policy principle of non-interference.
Again, I'm not very. I am big on patterns, but let's play my little game, shall we? Because every trader trades differently, and I want to show you guys my way, because there's a lot of videos out there. There's a lot of traders who are very good, you know, at showing you all the patterns. I want to just see price first before more than anything. Is this stock moving up? Is it an uptrend, a downtrend, or sideways? Okay, let's start there. Where are we with Rio? We're in a sideways. Okay, it's not in an uptrend. And again, I throw my Heiken Ash in because I want to eliminate all the noise. I just want to see price. It helps me see price the best way. So Rio is trading sideways in the daily. How about the weekly? The weekly is nice. We got ourselves an uptrend on the weekly. Okay. There is disagreement between the daily and the weekly. And what did I say about that earlier? Okay. The minute there's a disagreement within the daily and the weekly, I really want to try to find another stock. There's hundreds of other stocks, and the odds are going to be better when those are both in your favor. Now, again, I'm not so much like on the patterns. I'm very much on price. Okay. I would be looking at Rio, like here's the other thing. There's a lot of traders I know who are very big on the patterns, and they'll like a stock and they're like, oh, I see this pattern on it. It's there's a flag, you know, a nice bull flag forming. This looks really good. I'm not even really looking at that. All I'm looking at is trend and price, and I'm like, I like this stock. They're looking at patterns and they like the stock. So eventually we find ourselves at the same crossroads. I like to get Sparrow's opinion a lot because she has a different way of looking at things. So I know if I'm looking at something, and I know it was like T-Mobile that I asked you, Sparrow, I was like, hey, what do you think about this the other day? Because I know she has her way of looking at the stock. Okay. So, but eventually if she likes it and I like it, for me, that's like a win-win. That's like, okay, she's looking at her indicators and what she's seeing. I'm looking at my trend. I'm looking at, these things, and we arrive at the same conclusion. This looks like a pretty good stock. It looks like, yeah, don't short it. You shouldn't short it. This might actually be a good buy. So you arrive at the same conclusion often when you're looking at the information that way. So for me, what I see with Rio is I would wait till Rio kind of gave me something like over here, right here, a breakout. Okay. Well, this isn't really a breakout, but I like this strong movement here. Okay. This is a nice block. This is a lot. And this is the Heiken Ashi. But if we switch this thing over, guys, to the candles, that's a nice candle there. Okay. Look at the volume. This is some good volume. Stochastics pushing up. MACD kind of turning. So this is pretty good for me. This right here is like, all right, cool. Maybe this is where I would have kind of looked at it and maybe got in and put like a stop. And as it was moving higher, I would raise that stop. Okay. So eventually, like I say, it comes to that point where there's no more risk on the table. You've moved your stop all the way to your entry so that it's a completely risk-free trade. Okay. And that's where you'd want to get. So this way, if you do get stopped out, you didn't lose anything on the trade. Okay. It's already taken you to that point. But nonetheless, right here, this would have been like a key day for me to maybe look at going in long. And again, timing is everything for me. So right now, I would wait until it gives me a breakout over these highs. Okay, because at that point, once it breaks out over these highs, now I know the daily and the weekly are in agreement. So whether you're looking at like cup and handle patterns or whatever, once they get to that point, it's like I say, they're in agreement. You find yourself on the same crossroads. Okay, so that's what I would be waiting for. Okay, once this thing breaks out on the daily with a good breakout, and of course, I want to see that it is above the 20, okay, because it kind of dipped a little under it. If it breaks out, it's going to be above the 20, which is a good thing. It's going to be in agreement with my weekly. That's going to be when I want to get into the stock, because now they're both in, they're both telling me they want the same thing. So that's why I say, guys, I just kind of take off all of these moving averages and see straight up what is the price. Okay, what is the stock telling me? And that's just how I look at it, guys. That's my take. So I'm not trying to be like, this is how you should do it. If you're not doing it this way, but guys, I've done this for a long time. I've been in these markets professionally, 15 years, been trading, these are just kind of like gems that I'm trying to pass over to you guys, and things that that I want you guys to see that I know will help you for sure. All right, so where are we at now? Yeah, so that was stock was talking about Rio. Close above 80.44. A confirmed breakout on that one. 80.44, that's right here. Yep, see? They're 80.44. I'm with you on that one, man. So, sorry. Yeah, I'm with you on that one, stock. This could be a nice little one to, to kind of push up into, and maybe it has a good look. Here's the other thing: if it's running on the weekly, the highs are 89, and then we have another high here of 95. So if it does kind of get in sync, you could be looking at 20%, 22% if it goes up to test those highs. And if it blows past those highs, that's really good. So you're catching this at a pretty nice moment in time. Rio's a pretty good one, man. I like this one. I know this one wasn't requested, but still it was kind of good it was fun to look it up on the charts. Stock says your entry sets up your exit. That is what Street is saying. Yeah. Once you get in, you set your exit point, where you're going to put your stop. Okay. And you should not get into a stock if you don't know where your stop is. That's the other thing. That's a danger. And Sparrow says, just be extra cautious of being overly greedy and riding something up and back down into the red. Yes, absolutely. Sparrow is right, guys. You never want your profit to turn into a loser. Okay. This is just, if the market is giving you money, you don't want to give it back. Okay. You don't want to give it back. The way I handle that is, like I say, once the stock goes into, let's say I buy a stock and I kind of build into it, scale into it, have a nice position. Every time I do that, every time I add to my position, I am, I'm adjusting my stop accordingly. Okay. So I'm not keeping the same stop. As I add more, I raise my stop. Sorry about that. I raise the stop. Okay. And eventually, as I do that, I get to that point where it's like I built up a good position on this, that my stop is higher than my entry point. So I already know that if my stop gets hit, I'm walking away with money. Okay. Once I get to that point, every time the stock goes up, even more, if now my trade is risk-free, in other words, if I get stopped out, I'm not going to lose anything. Once I'm at that point, when I'm up like 5-10%, I'm taking money and putting it in my pocket. So I'll take 20% of my position. Okay, I'll keep doing that. And when you're there, you don't have to raise your stop so aggressively. Once you're at that point where it's kind of like you're just, the market is giving you gains every day, every week, and again, you're already risk-free, you can take that money that you have, okay, that you take out of the market, move your stop up slightly, and as it breaks out, you can take that money and put it back into that position. So you kind of keep snowballing it, okay? And that's all a matter of money management, that's a, because what you're doing is you're adjusting your entries and your exits on the stock by getting in at multiple points and taking out money at other levels. You know, you're scaling out, scaling in, scaling out, scaling in. If you kind of learn that art, because it is an art, it's not a science. I couldn't program this into a computer. I just can't. I do it like, again, like how I made the analogy on cooking and baking. It's like I don't know why I'll take 25% or 50%. You know, I just kind of feel it. I just feel like, you know what, I'm going to take 50% out of this one. There's no real rules on that point. It's just, I know I should take, but as far as specifics go, it's not something I could program. This is something that you just kind of, I think you get to, you arrive at that point where you're like, you know, I put in this much, I'll take this much, you know. Again, no overcomplicating it. So, but when you get to that point though, when you're in a stock and you're scaling and, you know, taking out money and adding it back in, that's when I say a stock like AA for the week, that's where I say you can play it almost for the whole year and take money out of this damn stock the whole freaking year. Because you're just, you know, you keep adding to it, taking your profits. You might get stopped out, but as it bounces up, you get in again, you add to it, you take profit, and you could kind of massage your entries, you know, and your exits. And all you're doing is once you catch the trend, you're just, you know, like I say, guys, you make a lot of money in these trends. You make a lot of money. You make a killing in these trends, and it's not, you know, you're not fighting the trend. You're not fighting the crowd. So, but that's how I do it. So, but Sparrow's right. Don't be greedy. Don't like hold on to it and say, I'm not moving my stop. That's not what I'm talking about, guys. Okay. I'm not talking about that. I'm talking about, you know, playing the trend, not just sitting back and letting it go, but playing the trend, you know, make sure you get out, make sure you set your stops. When I say I would be in this all year, I don't mean like I would be in it all year, you know, one entry and then get out over here. I don't mean that. I mean, I would be playing it for the year. Like I would, you know, this is a stock where I would be trading this year round. Okay. There's times when, you know, on earnings, you guys know I'm out. Once earnings comes around, I'm out of the stock. So that's 4 times out of the year that I'm going to be out of this stock. So again, I don't mean like, oh, I'm in it for the whole year. No, what I'm saying is that while that trend is moving, I'm working it. Okay. I'm playing in that trend. I'm buying, I'm selling, I'm buying, I'm selling. I'm doing that as much as I can, as often as I can, while it's going in that direction. And if you catch that and it's a long trend, that's like, again, that's like a whole year of just making profits, you know, and I don't want to say like you're not making any losses, but more than often you're making money on the stock. Okay. And so instead of just playing it and then looking at something else, you're playing it for the whole year. That's why a lot of these stocks, Starbucks, you know, if you guys been coming to my channel since I started this, a lot of these stocks, I was in like when I first started the channel. Okay. It doesn't mean I was in it and I never sold it or closed it. It just means that I get back into the stock. So like Nike, I was in Nike, you know, weeks ago, and now I'm back in Nike. So I play a lot of the same stocks over and over and over again. And you can too. You can definitely make money trading the same stock over and over and over again. Once you kind of know how it trades, it's, you know, it's, the more odds in your favor. So, that's how I do it. So, but, Sparrow says, when I teach that lesson, I always talk about a friend of mine who wrote SOS from $3 to $16 and back down. Yeah. See, that's horrible. That's horrible. I mean, you know, $3 to $16. Let's see if I can pull that up. Let's see if we can catch that. Okay. So this is like a little, penny stock kind of, well, not really a penny stock, but I don't exactly know where he got it, but was probably right here, right? It's probably like right here. So you get it here, it rides up. See, and my stocks don't trade like this too, guys. That's the other thing. So that's why I say, you know, Sparrow is another channel you want to follow, because she's trading a lot of these very explosive stocks. Okay, so a stock like this that runs like 200% in what 14 days, Starbucks isn't going to do that, guys. Okay, Starbucks will take, maybe if it's a good year, maybe it's doing 100%. Okay, so these really small explosive stocks, these are not what I trade, but this is, you know, Sparrow knows these stocks really good. So there's other learning. You want to gain as much information as you can, you know, learn. There's different ways of stock. There's different ways of trading, different styles, different stocks trade different ways. There's multiple ways to make money. So for me, I prefer the less risk. So like, you know, it would be, you couldn't scale into something like this, you know, like, because this is more of, once it gets up, you're out. But, you know, I feel bad for the guy who did this, or the girl who did this, Sparrow, who they, you know, they got in, it rides up, and then they just they give it all back. Now, that's one thing I will say though, guys. I call these Eiffel Tower moves. You know, the Eiffel Tower in Paris, right? When they move up like this, get the heck out, because this is very unusual. This is very unusual. Well, not for these kinds of stocks, but actually it is. It is. The stock isn't going to go do that and just keep going up. Okay, they pop and then they come down, and this happens. This will happen also on, you know, on megacorp stocks. It'll happen. And when you get like a pop where from one day to the next the stock is up like 30%, you should take profits. If you don't take profits and you give it back, that's bad trading. Okay, because if it pops in, you know, up 30% in one day, chances are it's probably going to come down. So something like that. These are, again, what I call Eiffel Tower moves, because they look like the Eiffel Tower. They go straight up, peak, come straight down, and violently, really quick. They don't, like, you know, it's not like a slow climb. It's like a quick pop and then a quick drop. So the Eiffel Tower. So you don't want to be on the, you know, you don't want to be at the downside of that tower. So that's a real shame to lose out on. But especially with these are kind of like firecrackers. That's what I kind of equate them to. You buy them and then they pop and you get out. You can't really, you know, you got to be quick with these ones. But again, I don't really trade these, so I shouldn't even really be commenting on this, because this is out of my out of my trading zone. Here, let's see here, what's going on here, guys? I'm gonna head out in a moment and catch some dinner. I'm feeling, after talking about Italian food, on comparing this. You could tell where my mind is at. The subconscious is speaking to me. I'm hungry and I feel like Italian, so I'm probably gonna catch some Italian food in a little bit, because I am getting to that point where it's that dinner time. What else we got, guys? Is there any other? Oh, HRB, man, Sheeny. I'm so sorry, Sheeny. I completely skipped over HRB. Guys, let's look at Sheeny stock, HRB, and let's look at this one. So what this is tricky. Okay, this one's tricky. You got an uptrend kind of breaking down but going over. This is like a pullback, okay, because it's in an uptrend but it came back down, touch of 50. So this is like a pullback, because overall, if you see here on our weekly, kind of sideways, but it is a little bit of a uptrend here. You know, for the last few weeks, it's above the 50. So look, HRB, I'd be waiting. This is like the cup and handle, of course. I would be waiting for the breakout. So I would be bullish on this one, waiting for the breakout. I wouldn't be short. This thing doesn't look like it wants. It looks like it wants to go higher, and once it takes out these tops, you know, that's where I probably start a long position on it. So again, apologies, Sheeny. Didn't mean to. I don't know how I overlooked that, but HRB, I would be playing it, waiting for the waiting for the breakout. I'm so bullish on it. And then Chicka Bow Wow was with Alcoa, and that was also a bullish. So guys, I'm gonna go ahead and turn off the queue here. All right, so let's yeah, let me turn this off. I'm sad that Sparrow's not on. This is a time where I'm eating my food and I am watching Sparrow do her thing. And yeah, this is that time. But it's you gotta know when to take a break for sure. So Sparrow, you have a good night for sure. I'm not mad at you. Yeah, you feel me? I'm telling you, I'm hungry. Yeah, you're in it for the pop. You don't hold it longer than you need to. Exactly. That's kind of like the options. It's like playing these on options is kind of like that same way. That's how a lot of people play it. Which again, I'm not an options player, but I have been, dabbling in the options. You can see right here, I'm in. I have a put on Bank of America, got a put on Colgate, and a put on Comcast. So, and these are all positions that, I'm in. I have shares, but I also have options. I need to. You remember what I said about you don't really know how your trade. You can't really rate your trading unless you take a series of trades, and then you can go back and, well, as you take them, you also will journal them. I don't know if you guys journal your trades, but that's something that I always say. Make sure you have a diary or a journal where you're, recording in it daily what you got into and why, what you liked, what are you expecting, all of that stuff. You will teach yourself how to be a better trader if you do this. You'll teach yourself more than I could teach you, more than anyone could teach you, if you are journaling your trades. If you are taking the time, print out the chart, make the marks, why you bought it, when you bought it, what you liked, what you didn't like, where your stop is. If you do this every day on every trade, in a year you will be a better trader, and because you'll teach yourself. That's why I said, I think, in one of the last streams, why some of the smartest people I've ever met and the people I've never met that I've read about, there's two things that they have in common. They may do different things, run companies, write books, art. It doesn't matter. But the most successful people that I've met and have read about, there's something that they have in common. And more than often, they do two things many times every day. It's a daily part of their life. The first one is they read a lot. They're constantly reading. Because they're learning. They're learning. Now, I know a lot of people don't read, but I guess even if you're going on YouTube and you're listening to interviews with some of the great traders, again, I told you about, if you're not following the Kaiser Report, that's a great YouTube channel. Max Kaiser, very big crypto Bitcoin guy, but he has an excellent show, and he's constantly bringing out people. And he brought out a girl, an author who's written many books, and she just wrote a book called and again, I'm forgetting it. I need to find it because I told Sheeny about it. And I want to tell you guys about it because it's important, and I just need to know for myself. I just need to know for myself. Let me see here. Okay, so one of the recent videos was an interview that he had with let me see here. Naomi Prince, okay? And Naomi Prince just wrote a book, her fourth book, called Permanent Distortion. And this book is about how the central bank is basically permanently distorting the markets. They're not going to stop. So this market is not really a free market. It's a distortion, okay? It's engineered and manipulated by the central banks. So this book, Permanent Distortion, I'm already kind of like, I'm probably going to order that this week. There's a couple of books that I already have in my reading list. Because, and this is not like, oh, look at me, I read, you know, this many books. It's not that. It's that you want to get into that groove where you are getting as much information as you can, because the more information you have, the smarter you're going to be at in your craft. So I'm just, any book I see at the on the financial markets, usually I'll take a look at it. When I take my daughter to the used bookstore, Eleanor's, you know, looking at her books. She loves the comic books and the classics, and I'm in a financial section. And I'm, you know, if I haven't got a book and it's $1 or $2 or whatever, I'll take it. Okay, I'll take it. I'll read it. Maybe it's junk, maybe it's not, but there's something in there that I can gain that will help my trading. Okay, but you could do the same again with YouTube videos, because like I said, you know, just watch these interviews. You'll learn a lot. But back to what I'm saying, reading books, you're constantly getting information, educating yourself, and writing, journaling. If you do that, if you do those two things, I guarantee you will be better at trading next year than you are now, and you'll constantly get better and better. But journaling is a very big part of it, because you're teaching yourself. You know, you're studying your mistakes, and you have to fess up to your mistakes. You have to write down, I was down X% on this trade. You have to write. You can't just like close a trade and forget about it and put it like under the carpet, like it didn't exist, under the rug, like it didn't exist. You have to write it down. You have to face up to the fact that, okay, I got to make this entry on a bad trade that I took. And after you do that, you know, repeatedly, you're going to start to see these mistakes that you're making. Like, you know, I did the same mistake here that I did last time. And same with your winners. You know, when you get a nice big gain, you'll see a pattern in your own journaling. So journaling trades, highly recommend it, guys. It will you will teach yourself. And again, I think you'll teach yourself more than anything, you know, as long as you're, of course, reading, watching interviews, stuff like that, you know. But journaling is a very good way to step up your game. And Chick, have a good weekend too, man. Definitely nice having you. I'm normally cooking and Sparrow's live. Yeah, I'm enjoying my Friday evening here. So nice. Yeah, it's nice having you, Sparrow. Nice having you all in the room. I did have a put. That's right, Sheeny. I had a put on 3M, and because my stop got triggered, I closed out my option. That's how I'm treating them. Okay, and I really don't want to deviate. there's temptation, like, oh well, maybe I should just hold on to it. I mean, you know, I made some money, just leave the I don't want to do that though. I really want to treat the options, like I said, the way I treat shares, and not deviate. Just like I said, take like 50 trades, don't change anything, and compare the risk to reward, the winners and the losers. Compare them against the shares. I think that would be really good, because you know, and I'm not trading a lot of stocks, by the way, I'm not trying to go into these options that cost like $1,000. You know, that's why if you see here, you know, the my put, you know, ideally, I think if they could be 350 or less, I think that's good. 350 or less. Okay. I'm gonna tell you guys something. I put a challenge on myself. Okay. My challenge is this. Most people say they start with $10,000 to trade. What do you think, guys? How much did you, this is a personal question. If you feel comfortable, kind of like saying, oh, I started with this much, put it in chat. You know, what did you kind of start with? But most people start with 10 grand. Most people are like, 10 grand is what I start with. I don't know why. I have no idea how we got to that number. I don't, you know, in a lot of books, some of the books say 50 grand. But anyways, here's my thing. Okay. I've been hearing a lot of people saying they started with $10,000 in trading, and, they say, I can't buy shares with 10,000. I can't make anything. Well, I admit it probably would be hard. Okay. Probably would be hard. I mean, if you're trading, you know, stocks that are like over $100, yeah, you know, you're you're not going to have as explosive gains. So I see the lure and I see the attraction to the options when you have a smaller account. It makes sense, of course, but you are taking on more risk, of course. And I'm, I don't want to stray. Like how I always say, the most important thing before making money is consistency. Then second is, how much you're making. First, don't lose money. Second, get consistent. Then you're on your way. But a lot of people kind of start the other way. Anyways, what I want to do is I want to see what can $10,000 just trading options do? What could I multiply that just trading options? So I've calculated my risk management, my money management, all of that stuff. And to trade 10 grand, the option should be priced at $350 or less on every option. There would be no way I'd put $1,000. I shouldn't. There's too much risk in that. It's too much of your portfolio. But if you have $10,000 and you're putting $350 in options, you probably can. That's the experiment. That's the experiment. What can you turn that $10,000 into 20 or 30 just trading the options? And so I put this little challenge to myself, like, okay, I'm going to do a little 10K challenge. And that means I can only spend $350 on an option. I can go a little bit over that, but I don't want to. As you can see here, my Colgate put is, $350. Most of these are, $350. I got 305 on Bank of America, $350 on Colgate and Comcast. But I'm really trying to keep it under $350. And as the account grows, I will add to it. But first, it's just that. What can you do with $10,000 trading options? Because I've seen, I tell you, I've seen these videos on YouTube where they are coming out and they sell people these programs, and I think they're scams. I definitely think they're scams. But anyways, they come out and say, oh, I did this with options. And I'm like, I've been trading for a long damn time. Not trying to, have my head all big over this, but I've been trading for a long time. Very hard to do that. Chances are you're going to blow up your account. So a lot of people, I think, could get burned. But as I said, I started this channel because I wanted to help people to learn how to trade. And I know I figured, if I can get the options working the same way I get my shares, that's going to be more that I'm going to be able to give to you guys if I can get to that point. Because I know more people would say, I'll buy that. I'll buy a contract here. I'll buy, I know that more people can do that. And again, that's the point here, guys. It means a lot to me to be able to share with you guys what I know and help you guys get to that point where you also are making money. You also are doing well. And if you can get there, that's great. That's my goal. And I figured, maybe if I really take the time to try to trade options, again, the same way I trade my shares, and if it works, it works. But I'm not going to know if it works until I take 50 trades. I know I said 100 trades, paper trades, but really 100 paper trades, I've taken enough that I know I could just take my trades here. But really, you don't really know if it's working until you've taken a good amount of trades, because now you can know, am I consistent? Out of 50 trades, out of 100 trades, am I consistent? Or am I just getting lucky with a few positions? And there's nothing wrong with that if you are. But at least because then okay, well, I don't want to trade off luck. Nobody wants that. I really want to learn how to do this thing. So again, it just helps though. But having those trades where you take again like 50 trades, then you can see, is it working or not? Especially if you're journaling these trades, which I am. I'm starting to journal the my options trades, because again, they're tied into positions I'm already taking anyways. Okay. But like Nike, I wanted to take an option in that, but it was, like over 500. So I didn't take it. I'm trying to keep it under 350 per option. So And Chick says 2,500 15 years ago. Oh, okay, yeah, 2,500. That's good. I think 2,500 is good, honestly, man. Because you know what? The first time you put it in, you're gonna blow it. I blew it. I started with 25 also, and I blew it. Okay, this was back in those days. So yeah, I did the same thing. Sheeny says IRA started with 40K. Day trade account started with 35. Okay, cool. There you go. Then I have a $500 challenge account to see if I can build with options. Nice. So you see, I'm kind of. That's where I'm going with the challenge. So, Purpleton, $500 minimum required deposit 20 years ago. Wow. Sheeny says my $500 challenge account is at $2,700 as of today. That's good, bro. Congrats. Very, very good. Keep it going. Did you when you saw what you built it up to, did you look at all your trades and see, was it one or two bangers that put you up to that amount, or was it, what was your win ratio? Because if you had a low win ratio and you did it to that, that's pretty damn good. That's not bad. That was scalping a lot of small movements. Got you. Kind of cheating though. I just follow the trades that are working on my day trade account. Hey, man, there's nothing wrong with cheating. Legal cheating, okay? So, like insider stuff, yeah, that's a different story. But look, we know the markets are rigged, and we can use that to our favor. That's the thing. See, you can, if you go to Vegas, and you try to, you could learn, you can do calculations. You could learn poker calculations, blackjack calculations. And you know what happens if you learn it well? You make money. But you know what happens? You get kicked out of the casino. Okay? They throw you out. On Wall Street, they don't throw you out. On Wall Street, it's allowed. So all these calculations, all of these, the whole risk reward, you can do it. On Wall Street, it is allowed. So I think I'm only on FinTwitch Trader who's never blown up an account. That's awesome, Sparrow. That's awesome. I will say, I don't know anyone who hasn't blown up their account who's a good trader, and you're a good trader. So be careful. Okay, be careful. Because it goes back to like my analogy that I said on the bike. If you're on a bike and you're, but you know what? You seem to have a good, you don't strike me as the kind of trader who's going to take a trade and then let it tank like 50% and put all your money in that. I know you wouldn't do that. So, I think you'll probably, we all take a couple hits, but the fact that you haven't taken like a huge hit or anything like that, that's good. That shows that you're, really managing your risk reward. And you don't have to. As a matter of fact, you know what? Let me say this. Let me scratch what I said about I don't know any trader who hasn't blown up their account. Again, back to the turtle traders, there was quite a few traders who never blew up their account. They really didn't. I think some of the women were the best traders in there. They weren't they didn't make the largest wins, but they were very, very consistent. And I don't think they really had a down, they had a few down months, but overall they were constantly green at the end of the year. Anyways, a good book. So yeah, that's not a rule, guys. I don't want, so let me just pretend I never said that. Okay. But when you're first learning, I do think that you will lose money when you're first learning, and it's not bad because you have to treat it like tuition. I mean, it's like anything, like how I said before, if you go to college, you have to spend money. You have to pay the school, you have to pay the professors, you have to pay the classes to learn. If you want to, be a doctor or an attorney or something like that, you have to pay them. You can't you can read and learn on yourself. But for the most part, you got to pay your instructors because they are taking time to teach you. So that when you go to school, you are going to put money in and you're going to go into debt or whatever. You're paying money. You call it tuition. But when people trade, for whatever reason, That does not come into their mind. So it's like I said, it's almost like somebody who just starts boxing and they think, when I get in the ring, I'm going to have a knockout every time I face an opponent. And it's foolish to kind of think that, because you're not. You're going to get hit. You're going to take you're going to take some blows for sure. And in the market, those are losses, but it's a tuition. Okay. When you're first learning, unless you kind of sit by somebody, I don't know how you would do it, guys, honestly, because I learned by making mistakes. Like, that's how I straight up learned. I had to kind of wipe out before. It's kind of like that whole, don't touch the stove or you're going to burn your hand, and you touch it and you learned, okay, I should have listened, because it is hot. That's how kind of I learned. I would make these mistakes and it was like, I never want to make that mistake again. That sucked. This was a lot of money that I lost. I don't want to do it again. So when I would come back to the market, if I find myself in that predicament again, I was just that much more cautious, because I didn't want to repeat the mistake. So women absolutely make great traders. Yeah, I don't know why there isn't more female traders. I really don't know why. I mean, of course, in the old days, there wasn't, like, women in high positions in general was kind of a rare thing, like women CEOs. But now in today's world, I don't know why. I really don't know why there's more. And I say like here, like on Twitch, a lot of the streamers are all pretty much guys, right? I think you're one of the few female streamers. I think there might be somebody else too, right? Maybe 2 or 3. But there's, I wonder why there's not more, because there is a good amount of female streamers who are streaming different things, games or whatnot. It kind of, I mean, but nowadays it's, yes, there's more men in the field. Like, if you're watching interviews and whatnot, a lot of the great traders are pretty much all guys. Like, but I don't feel like I don't feel like it's one of those things where it's like like closed doors to. I really think a lot of women are championed on to doing it, honestly. Like, for me, I have, I want my daughter to do whatever she decides makes her happy in life, and whatever, fulfills her happiness. That's what I want her to find, whatever it is that can give her that. But if she was to trade, that would be, if she became a trader or got into the financial industry, that would be awesome for me, because that's what I was in. So I champion her on, of course. And I mean, I teach her all this stuff. She'll know how to manage it. That's the other thing. Whether or not you do this for a living, when you know how to manage it, you can do other things. Like, you can, you don't need to be tied to the computer screen. You could manage your portfolio and, make money. Either whatever, you have a coffee shop or whatever, this thing you could do anywhere you want, as long as you have a computer. If you know how to do it, you can pull money out of the market. It's the greatest business, I think. Better than real estate, better than anything, because you could really make a living off of this. Doesn't mean that that's all you have to do, unless you're a day trader. If you're a day trader, of course you have to be at the computer every single day. But if you're a position trader like me, or a swing trader, you don't need to be glued to the screen. So anyways, I think it would be awesome to have more female traders, because females think differently. They absolutely do. They have a different view, a different take, different character, different makeup. And to see how some of the great, like, years from now, to read some of the great women traders, I would want to see how did they do it? What was their method? Because I know it's, it could be different in their own way. Cathie Wood, unfortunately, has she didn't prove her. A lot of people were really fascinated when she came out. She was like the star, and she just she's completely tanked this year. Unfortunately, it's a shame too, because she and they now she's like so controversial with Cathie Wood. You know, I don't know. I'm not sure. When Kathy Wood first came out, I know a lot of people were like fascinated with her, but I think she's just made some really lousy trades. That's like, man, this is not good for the females who are in the industry, because, you know, then you'll have stupid guys out there saying, "Oh, see, women can't trade." You know, you have that, and you do have that. I mean, I would say more in the brokerage industry. But not necessarily finance. There's a lot of female financial advisors, by the way, but female financial advisors are not traders. You know, even though they're in the financial industry, they're not traders. It's a completely different crowd. The gatekeepers, the gatekeeping is still there. You know what, Sparrow? I would disagree. I would disagree on that. I think this is just me speaking, okay? But I think I'm gonna say this. I'm gonna say something crazy, okay? But I'm gonna say it because I think you're a good trader, okay? I've seen what you do. If you can trade that way on paper, and if you can put all your trades on paper, okay, and say, look, in a year, this is what I did in my account trading this. If you can do that, and let's say you wanted to go work for a hedge fund, I think you could do it. I think they would take you absolutely right away over a person with an MBA, guy or girl. I think they would, because it's your own capital. So a lot of people who are like, how do I get into this? I want to get into this. What school should I go to? Schools help, honestly. But with what I know, with what I've experienced, if there was some kind of, if you wanted to get into trading, like be a trader, or, you know, whether it's a hedge fund, which I would say go with, I wouldn't even say like, you know, now the institutional traders for the banks, I wouldn't trade with a bank again. If I was to do this, like, again, in the professional world, well, even I would go with a hedge fund, you know, even to this day I've thought, but the thing is, I couldn't do that because the price would be that I would not get to educate and teach my daughter. So there's nothing to really talk about at that point. But if I was like, you know, wanted to get into back into the I would get into hedge funds if I wanted to get back into the financial world, and it wouldn't it's not that difficult. It wouldn't matter, I think, if you're a female or a male. I think if you have a track record, honestly, if you have a track record, and if you approach a hedge fund manager and you say, hey, I want to work at your hedge fund, I have experience. They're going to say, well, where did you work at? Well, I didn't work at, you know, JP Morgan or anything like that, but this is my account. This is what I did last year. And if you beat the market, and if you actually had a lot of trades and you're consistent, they will look at you. And I think that they'll probably go with you over some other person who's never traded before in their life or never used their own money, because you used your own money. And that's the greatest report card that you can have. That really is. You can get into a hedge fund if you can trade, period. You know, it's not easy, but it's not terribly difficult, because the hardest thing in the world is to be a trader. I mean, you know, of course you have brain surge and whatnot, but it's very, 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 very hard to be a trader. Most of the people who trade in Wall Street do not make money. They lose money. It's designed like that. So if you make money, you're already in the top 5%. Okay. Whether it's, you know, 100 grand or 50 or 20 $1 million, it doesn't matter. If you make money and consistently have a report card, they'll look at you. So if you wanted to get into the actual industry and be like, you know what, I want to take what I'm doing and actually put, like, you know, a lot more zeros behind it and really like run with it. I really would like to trade and, you know, just like do this for a living. Like I really enjoy it this much. I think you could do it. I really do. I think you would probably have an edge being a female, honestly, because you'd have, let's say there's 10 people applying and 9 of them are guys, you already are you're already standing out. Okay. It's like there's only one girl. So already there you have attention. Now, if you chop it down even further and let's say, 70% of them have never traded, then you're already there. Again, you have another edge. So I would say, now I don't know Rita and, but I tell you this, Sparrow, this I can, when I was trading with a bank, the head trader was a female, and she was pretty good. She was pretty good. Very quiet. She wasn't a great teacher. A lot of times I was trying to get information out of her, and it was like pulling teeth. But I think if you wanted to do it, I think you could do it. I mean, you already kind of know how to read the charts. I mean, not kind of, you know how to read charts. So if you actually had like a really good track record, I think you would get in. I think they would take you. You would start off kind of like on the ranks. That's how they do it. But I think you could get in, and I don't think being a woman would matter. Yeah. The hardest thing though, Sparrow, I will say this. I think what's hard for women is being around a lot of men. That for sure. Because I know if my daughter was to get into it like now, with the way it is now, she would be around a lot of male traders, and that's male culture. That's just how guys are. So, and how that's guys behave a certain way. That's just the nature. Loud, when the trade is going on, they're different from females. So I think a lot of times that might be hard for females, is that they're around these like loud guys or whatever. So it's harder for women, especially if there is the sexist jokes or things like that. But a lot of that has been curbed now. But if that's there, that's also the other thing. That's like, I got to be around these, these kinds of guys that are really irritating. So a lot of times it's the company that's hard. It's like, you might want to do it. You might get in, you'll probably get in, but do you want to be around that crowd? And if it's kind of annoying for you, it's just, what can you do about that? That's what drives a lot of people out. Like my daughter loves playing chess. She loves playing chess. And one of the things that I tell her is that, when you start to do competitions, you're going to be mainly in a room of guys, and when they come across, some of them are not going to want to play with you because, like, for one, they're going to be scared that they lose to a woman because all the guys are going to make fun of that. Like, oh, you lost. It's just kind of stupid behavior. But a lot of times that's why women leave chess. There's been some very good players, and they leave because it's just like they get tired of being treated a certain way, and that is unfortunate. That is just, what can you do? So anyways, I'm kind of just going off and kind of blabbing here, but look, I will say though, if you did want to get into that, I think you could. You just have to just again keep a track record and apply with that, and I don't see why I don't see why I don't know what your education is or things like that, but a track record is gold. It's very meaningful because most people don't have one when they apply. So if you can take your own money and do something with it, people will trust you because they'll know that this is like your own money. Let me see here. I'm gonna have to dip out a little bit, guys. You said I played video games since I was a kid. People always say gamers are so toxic, misogynistic, but never been my experience. That's when I started trading, when I experienced the most gatekeeping. Really? How? Because I kind of feel like at least since I started streaming, I feel like you're pretty popular in the community. I feel like everybody has a lot of respect. They love having you in the chat room. But I don't know how long you've been streaming for, but yeah, experience gatekeeping. That's a shame. I'm a gamer called my ground on, guys. That's not an issue. Well, if you can do that, usually the girls who are in trading are usually kind of like that. They go drinking with the guys or whatever. They don't have any problems. some of them, they just grew up with brothers or whatever, or they're just, you know, it just doesn't bother. But some of them, they do. Some of the very girly girls, you know, it's kind of hard for them to adjust to that kind of culture. And for me, like, I'm a very quiet kind of person, so it was hard for me to adjust to some of that culture, honestly speaking. Like, you know, I was never an athlete or a jock. I was like the, you know, the musician and all that, you know, the artist, musician. that was my thing. So sometimes, like, when I was in the brokerage industry, it was very, like, it reminded me like the jocks that I knew in high school. And that was kind of hard for me. Like, oh my gosh, it was, you know, very belligerent, some of these people, you know, so that was hard for me. So I could imagine for, you know, some of the girls who, you know, maybe that reminds them of, like, you know, I don't know, some bad memories. It'd be hard. Anyways, yeah, jock culture is like jocks, and that's just not my thing. Not, you know, I don't know. I mean, I don't mind it if you're into sports, but when you're belligerent and you like to taunt and tease people, that, for me, that's, you know, I don't know. I don't want to subject myself to that. So I always kind of went my own way on that. M-Spar. Yeah, we've all been there, Street. Yeah, for sure. But all right, guys, it's 7:42 Friday evening. I appreciate all of you guys coming in here, hanging out with me, and just kind of, you know, just doing our thing here. It was a good week. Okay. Crazy week, but it was a good week in the market. For me, you know, it was green, which is a good thing, but it was crazy, and the craziness is going to continue. So be careful out there. I'm going to try to do a video post on YouTube where I get more into talk more about the market, you know, talk about what's going on with Powell, what I think is going to go on geopolitically, how it's going to, you know, affect the markets and whatnot. So I'm going to try to do this video over the weekend and put it out there. So keep a lookout on that. If you're not part of my Discord, definitely would love to have you. So, you know, join my Discord. I need to put like a link, which is kind of on there all the time. But anyways, it was a good week, guys. I hope you all had a great week as well. Okay. If you didn't, don't beat yourself up. You know, there's always next week. So I will be in the room on Monday at 10 in the evening. Okay. That's Central Time. So, but Monday I will be here. It's going to be a late night Monday market stream, and that's going to be fun. Okay. I'll be doing my stuff that I'm looking at, and getting into all that stuff. Until then, guys, I will catch you all later. You have an amazing weekend. Have a great weekend. Think positive thoughts. Okay. Treat yourselves kind. Be nice to yourself. Love yourself. You know, people you haven't talked to in a while, reach out, talk to them. You never know. Just a phone call could just make somebody's day. Putting that into the world makes it even better. So, but for sure, treat yourself kind. Okay. Repeat good thoughts to yourself. Don't put yourself down. If you're struggling in trading or you made some bad trades, write them down. Do your journal. Okay. And know you'll get better with work. Okay. You just keep practicing, and I'll do my part to try to, you know, keep my channel going and kind of give you that motivation, and also just share with you what I'm doing. So hopefully, you know, that can help. That's the whole point of the channel. So peace and love, guys. I'll catch you all on Monday. And again, keep a lookout for the video posts on YouTube. Let's go ahead and raid somebody. Who's on? Raid Lugdor? He's on? Okay. Yeah, let's raid him. Let's raid him. Let me get this thing going, and we will set up the raid. All right, so Twitch TV, where are you, Lugdor?
I know we've been talking a lot, and I'm sorry I got questions about the change in my lot. Seems trickier than...
Okay, there's Lugdor. All right.
Ones.
All right, so let's do this now that I'm there. Go back in. Oh, okay, I got to do it through my Streamlabs. Oh, I can't do it through here. All right, so I got to do it through here. Let me see if I can do it through here. What is it? Raid Lugdor or Lugdor. I don't know how you say it, but let's go ahead and raid him. Come on, why is it doing that? Invalid name. And guys, what do I have to? I put backslash raid, then the channel name. Why is it doing this? Guys, it's not letting me raid. Look though, Sparrow, do you know how the command I need to make? What, not make, but what I need to put into the chat, because it's not letting me do it. And thanks for putting my Discord link there, Sparrow. Appreciate that. Come on, why is this not working? Yeah, that's what I'm doing. Slash raid. Yep, slash raid. Yeah, that's exactly what I'm doing, Holmes. I am doing that, and this is what it's telling me. I don't know if you guys can see this, but that's what it's saying. Is there like permissions that he has? Maybe I can't raid? Because I follow him. Let me try do it on his chat. Maybe I need to do it on his chat. I don't see any. I don't even know. Guys, I can't do it. The reason I can't raid, I don't believe I can raid, because I'm streaming both to YouTube and to Twitch. And I think that's why it's not letting me do it. Yep. I think that's why I'm not able to do it. That's a shame. Cause, well, wait, no, wait a second, let me see. I'm gonna do, you know what? It's cause I just had, all right, let me try this. Let me actually go to, you know what? Chat. It's cause let me do this here. I think this is, yeah, I got it, guys. There we go. Yep, I have to do it from, wait. Yep, that's it. All right, guys. So here we go. Let's we got 12 people going over to Lugdor chat. So what I needed to do, by the way, okay, I had to actually like go to Twitch TV / Street Alerts, like my actual channel, and then do it there, because I only was using the chat link. So I had to do it through the channel. So but all right, guys. So listen, you all have a good, awesome, beautiful weekend, and you take care of yourself. I will see you on Monday at 10 o'clock, okay, Central Time. Also, Sparrow is going to be streaming on Sunday, and I think Stock Market Plan is going to be streaming his Spanish stock channel, where he speaks in Spanish to his Latin American viewers. He's streaming, I think, tomorrow on Saturday. So if you guys are hanging out, just chilling, we got a great schedule. We got Stock on Saturday, Sparrow on Sunday. Sparrow, I don't know, are you going to be on Sunday? Hopefully you'll be on, but if you need time to chill, that's cool too. It's always good to get yourself straight. But Sparrow will be on Sunday, maybe, and I'll be on Monday. So peace and love, guys. I'll catch you on Monday.
yang thing happening.
Hey, what's up, Elgo, bro?
Okay, old
I
boy.
love it, kinda.
I'm prepared to go on camp tonight.
What up, bitch?
You're going to?
Oh shit, I'm getting raided.
Yeah.
Oh my god. You just
Hey,
got
what's up,
Eludor.
Street Alerts?
Hey, hold on.
I didn't expect you coming.
Some paraphernalia in the background.
Dude, who cares?
Oh, hey,
forget
hey,
it.
you guys aren't on stream. I just hopped into audio.
It's for the children. I'm trying to set a good example for the children.
All right, you know what? I'll leave.